Were you worried? Where's Bruce? I'm here. It's all good. How you doing, guys? Welcome and good morning to Tuesday, February the 23rd, 2021. Another fun day in the markets. Following a lot of different stuff today already, and I welcome all of you to the show. Nice to have you here today. Following a lot of different stuff today. There we go. I'm just double checking to make sure my volume is off. I wanted to update you on a few things that are going on right now. First of all, welcome to Stock Markets with Bruce, where we talk about the markets in plain English, if at all possible. Try to make heads or sense of what's going on out there. All kinds of stuff happening. Is the world coming to an end? Nah, it's not coming to an end. Is the market over? No, the market's not over. Will stocks only go up and never go down? No. Do they, when they go down, are they a bargain? Depends on the stock. When they go up, are they sometimes overpriced? Yeah. And so you kind of moderate your positions and you figure out where you're at and remind yourself of why you're doing what you're doing and where you are in the world. And then you kind of figure it out from there. Well, there's that. That all sounds good in practice, but now you have to do it in real life. That's the hard part. Geez, I know what the rules are, but darn it, it's so hard to follow the rules sometimes. What are we at right now? The Dow is showing a gain of 21 points so far in the pre-market, with about 57 minutes to go before we open up. S&P down 18 points. Who cares? Half of 1%, no big whoop. But it's the NASDAQ that's causing all the consternation, and it's down 100 or 223 at the moment. and the reason it's causing all the consternation, funny enough, is because people are realizing, maybe I'm a gambler and I'm not an investor after all. People are figuring out, I needed the market to go up like right now because I got bills, man. I've got needs, hopes, desires, and I haven't got time to wait 5 years for a 5-year investment plan. I have a 5-minute investment plan, and I want to see what's going on. And I'm going to go to places like Bruce's Stock Channel and find out what he can tell me is going up in 15 minutes, so I can reach my investment objectives long term, like between now and an hour from now. That is what is happening with NASDAQ investors the last couple of days. They're realizing that, darn it, there's no guarantee that the market's going to double and triple in a day or two, which is kind of what I would like to have happen. I was kind of hoping the market would be like a slot machine. I put a couple $100 into a stock and it would take me to 10 grand, get the jackpot and all is well. Not working that way. We did have a couple of issues that went a little too far too fast, Gamestop being one of them. Churchill Investments is another one. And then there's the bitter reality of, gosh darn it, people sell too. And they don't just stop selling when the stock goes down 3 or 4%. They keep selling and then it goes down 15, 20% and they keep selling. And where do these sellers come from? Well, where did the buyers come from? Same thing. You've got the overachievers and the underachievers, and everything comes out in the middle. Welcome to the world as we know it. Well, nice to have you here. Nice to see you. I was just taking a look at some markets there and seeing what they're looking like. Fun times at the OK Corral is what we have going on here. Look, this morning, even our friends at Home Depot, which I started mentioning yesterday on my show, I mentioned Home Depot for some of you out there might be a perfect stock to get into, a long-term hold, growing company, all that good stuff. Well, this morning they come out with their numbers. Oh my God, glasses are awful. They came out with their numbers this morning and broke all expectations. They blew past analysts' expectations for gross sales, for net profit, earnings per share, set a higher mark, higher numbers. They increased their dividend by 10%. When's the last time you got a 10% raise from your boss at work? Anybody know? I remember in the 70s, I used to get 10% raises, but then we had 20% inflation. Last time you got a 10% raise from your boss, you can't remember it unless you were maybe promoted or you quit a job and went to another job and you got more than a 10% raise. That's the only way you're getting a raise out there. You're not getting a raise from your boss of 10%. Are you kidding me? Home Depot raised their dividend by 10% today. Just to be a shareholder of the company, we'll pay you 10% more in a dividend to be a shareholder of the company. You're going to get now $6.60 a year for every share you own instead of $6. Well, that's just made every mutual fund, pension fund, hedge fund that owns this stock richer, because they're sitting there going, our yields are going up. This is fantastic. Stock is down today. How about that? You set all-time records for earnings. You increase your dividend by 10%, and you're down $6 a share in the pre-market. How do you like them apples? Down 2% on the day. What do you have to do to make the market happy in order for them to love you? Sometimes it's just not good enough for a stock to be standing in front of you asking you to love it. It's just not good enough anymore. I saw that movie somewhere. I swear. 269.83 on Home Depot, down $6 a share. You know what I call that? I call that a buying opportunity. That's what I call it. I call that a deal. I call that a stock on sale. I call that an opportunity to pick up a top-notch, I think it's a Dow 30 component stock, trading at 23.8 times earnings, and something's telling me that it might be trading more like 21 or 20 times earnings because of these increased numbers that are coming out. The yield is only a little over 2%. You get $6.60 a dividend on a $270 stock or something like that. What's it right now? $269. So you're not getting like a 10% yield or anything like that. But oh my goodness, when a company offers a 10% increase in a dividend, it's a 2.44%. I just calculated on my computer. 2.4% yield on your money. Are you getting 2.4% from your bank if you give them $5,000 for 5 years? When's the last time you saw that from a bank? You're not getting that. This is a deal. I think that in the next 2 and 3 and 4 years, they're going to keep increasing the dividend because they're going to keep increasing their margins. Buy it at 269.80 or 270 or whatever wants to open at here. You buy it around here. It wouldn't surprise me that in 4 or 5 years you're getting $8 or $9 in dividends for a $270 purchase price, and now you're over 3.5% yield every year. Your capital appreciation will be the one you're really going to like. I can see this stock reaching $350, $400 a share in the next 5 years. Is it going to double in 5 minutes? No. If you're here to have me tell you that Home Depot is what you should buy and it's going to double this afternoon, you are sorely mistaken. You have come to the wrong guy. That is just not going to happen. Not going to do it. But you want a company that's going to be around in business next year, no matter what happens with the pandemic. You want a company in business that is going to continue to improve their margins, whether we travel or not. This is it right here, the Home Depot. It's pretty mom and pop America, apple pie and ice cream, hot dog at the baseball game. You can't get any more American than this. You can't get any more, I don't know what, loyal to your country than this. Loyal to your country. Let's be fair, though. Home Depot imports a lot of their stuff. If you notice on the bottom of the labels, made in, not made in America necessarily, what you're buying at Home Depot or anywhere else you shop in retail. Let's be fair. It's imported. Americans love to import from overseas at very low prices and then mark things up for Americans to buy domestically. However, can of paint at Home Depot, a paintbrush, wallpaper, whatever you need to solidify your doors, to buy a new toilet for your bathroom on the renovation. Yes, there's a lot of American products in Home Depot, and people at Home Depot help other people improve their lives. And a lot of folks have spent thousands of dollars at Home Depot to buy new sinks and faucets and you name it, and their home values have gone up correspondingly as well. So it's a win-win. It's a winner. Home Depot, buy all you want, but don't buy it for a 5-minute flip, because you're not going to be happy. But if you're into this stock for a couple of years, I think you're going to sit back and go, gee, that was a good move. I'm kind of glad I bought that stuff. They just their sales a year ago were what was it, 110 billion. Their sales for the last year, or 2 years ago, 110 billion were their total sales. This last year, 132 billion. in the middle of a pandemic. Let me get this out there. In the middle of a pandemic, they increased their sales by $20 billion. Those are American dollars. Those are real dollars. They're earning, sorry, folks, I just get all worked up. They are making nothing but money. Their margins are higher. In other words, just because their sales are higher, that's one thing, but their actual profit margin per dollar sold is better too. So they're firing on both sides of this argument. The one in gross and net, pretty darn good. I kind of like how they're doing it. Yes, very good. Now the dividend is up 10%. Pretty smart move, pretty nice move. And like I said, every mutual fund that owns this stock, pension fund, hedge fund, none of them are selling it. If you think that this stock is down $6 because they're getting out, think again. They're not getting out. They're going to be in this forever. They're in for a long, long time. So there you go. What can I say? It's a winner. Just in the last quarter, the last 3 months, sales $32.3 billion versus $25 billion. A $6.5 billion increase in sales in 90 days compared to the quarter a year ago. This is insane. This is insanely good. This is $2 billion a month more in sales per month. There's big, okay, and then there's really big, and this is really good, really big. We're talking about a retailer, okay? We're talking about a company where you have to drive to it. You have to get out of your car. You have to walk in there. You have to walk around with a cart and then walk out and load your car up and take the stuff home. It's not like you hit the computer and just have it all delivered to your house like Amazon. It doesn't come in cardboard boxes. You got to go get this stuff. Even with all that inconvenience on all of our souls, these guys are making a fortune. Yeah, this is a winner big time. Winner, winner, chicken dinner. That's right. The one who was. Winner, winner, chicken dinner. There it was. I saw the comment. Thank you very much. Love it. Way to go, HD, and put it in your portfolio long-term and enjoy yourself. You can write options against the stock if you want. The stock is 270. I'd be writing 290s, 295s for a month out, 6 weeks out. Take the income from that, add it to your portfolio, and just enhance your revenue on top of the dividends. Win, win, win everywhere you go. Right on. Other news coming out today. Have you seen what's happening with the, what's that thing called? The Churchill stock, the SPAC that everyone has been, not everyone, but so many of you have been just asking me about Churchill. Bruce, what about Churchill? What about Churchill? Well, the SPAC finally announced its deal, didn't it? And are you happy with that deal? The CCIV is a symbol. Churchill Capital Corp, trading yesterday at $56 before the deal was announced. Trading at $37.80 right now in the pre-market, down $19.50 a share. And this is how you, in the world of stock markets with Bruce, with your Uncle Bruce, this is how you don't buy into a SPAC. There's ways you buy into a SPAC, and then there are ways you don't buy into a SPAC, okay? The way you don't buy into a SPAC is when you are buying a company that hasn't announced their deal, and they come out at $10 a unit like every other SPAC does, and the shares trade at $35, $40 a piece before they even announce the deal. Then they go up to 50, 55 on anticipation of what the deal is going to be, with who it's going to be. And then they announce the deal, and the people go, oh gosh, I forgot. Yeah, the guys who are, that the SPAC is trying to buy, which is a reverse takeover, those guys will own most of the stock when it's all said and done, and they get to dictate to the SPAC what the deal is. Do you want to take over our little company worth so many billions of dollars? These are the terms and conditions we would like to work out to have in place before we accept your offer, because we know as a private company that you, the SPAC, have a lot of money in the bank. That's all you've got is cash. We know that, and we like that. That's what we love about you, is the fact that you've got money. And we also like the fact that you can probably attract even more money for the right private company. We love that too. And we think we are the right private company to be taken public. Absolutely. But just because the shares are $57 a share doesn't mean that we're going to accept the deal where you know, you guys have made 5 times your money, and we now come into your price. Oh, no, that's not going to go. No. You went public at $10. We want to get in at 10, or maybe in this case, we'll get in at 15. We'll be generous. We'll come to you at $15 a share, so that we, the private company, own 80+% of the overall deal, because we're the one with the assets, we're the one with the potential, and you guys come along for the ride and enjoy it. That's the wrong way to get into a SPAC, by the way. As a retail investor, you do not buy stocks at $35 to $50 a share that haven't announced a deal. It's wrong. The right way you buy a SPAC is you wait until the company announces the acquisition, the merger, so you know who the partner is. You see the terms of the deal. You find out that everyone is getting in at the $10 level with hundreds of millions of dollars, the initial SPAC, and hundreds of millions more coming into the SPAC. Then you decide, well, hey, do I want to get in with these guys? Now I know who the players are. I have an idea. So you get involved with SPACs, like SPACs I've kind of been mentioning, Starboard Ventures, Starboard Value, Fortress Value, Gore Holdings, and Virgin Group. You know who the players are from the SPAC side, and now the private company side. You know the structure of the deal. You know how many dollars are going to be coming to the merged entity, not only the original dollars in the SPAC, but a whole bunch of additional Wall Street money. You're finding out who the Wall Street players are that are putting the money in. You're finding out some of these massive hedge funds and investment funds and pension funds are investing in these private merged deals because they like it. And they're getting in around $10 a share. And I'm recommending stock to you guys that's trading at 10, 12, 14, 16. And I'm trying to hold you off from chasing SPACs too high. So like for example, Gore Holdings, I'm praying that Gore Holdings comes back. I think we might have a break here in Gore Holdings. I think Gore might actually be coming back to us into this $20 range or below, and that would be great. Even though we know Gore is merging with Matterport, we know the deal. You know, it's a $3 billion, almost a $3 billion deal with $650 million cash being made available to Matterport. Well-funded deal. Winner company is on fire, the private company, and they're going to expand dramatically from here. But the stock was $25 a couple of days ago when it was announced on the air on CNBC that Josh Brown liked the stock and he started buying into it. I was hoping it would back off to the $20 or less level, and I might get my wish handed to me, which would be fantastic. That is exactly what I was hoping would happen, that you would get a shot at stock maybe between 18 and 20 if this can take place. That would be a really good thing, because again, I like the deal now that we know it. It'll be funded. It will become Matterport. And yeah, the stock can do $30 to $50 a share. Yeah, sure it can. I'm a happy guy if it does. And if you can get in at 18 and out at 35, or in at 18 and you're holding at 40 and 45 and you're writing options up there now, fantastic. Holding even longer term, fabulous. 1951 for Gore's Holdings in the pre-market right now, down 244. This is really good news. You're watching Uncle Bruce cheering the fact that a stock is down 11.5% on the pre-market. I'm a happy guy. This gives you folks a shot at potentially an $18, $19 price for Gore's Holding, rather than having picked it up yesterday at 25. I was trying to, hopefully I held you all off and you didn't go in there. I think that at $18, knowing what we know about the merged entity, that's a far better price to pay, and just improves your success, because your odds of success have gone up, because from 18 to 25, which is where it was, you're already up $7 a share. The merger coming through, take us to 30, 35, and 40, even more money. Nothing wrong with making 25 to 40, but it's nicer when you can go 18 to 40. It's just nicer. $7 nicer. 7 more reasons why you want that deal. That's how you buy a SPAC. You buy a SPAC like a Starboard Value, or a SPAC like Fortress Value, or VGAC, Virgin Group Acquisition Corp. You buy these SPACs that are 12 or less, 14 or less. That is better than an IPO that you're ever going to get. You're never going to get an IPO deal better than this. You're not the last guy in. You're one of the first into the stock. The company is going to, these companies will all be announcing all kinds of changes, probable partnerships, probable acquisitions likely. They will invest in their business to take it to another level. All this is good. This is all good. And the Churchill deal with the electric car company, that deal was already pre-hyped. That deal was already promoted. That deal is old news. Lucid Motors. If anyone out there thinks that Lucid Motors is anywhere near in the same position corporately that Tesla was when Tesla went public, think again. Lucid is a shadow of, not even a shadow of Tesla. It is micro compared to what Tesla was and has become. Lucid has got a long road of pain in front of it yet to get to the promised land of delivering vehicles to Americans. I can't even fathom the long road that they're on, and the billions, and I mean with B's, the billions that they're going to need to get their vehicles out there and running and give the buyers the assurance that when you own one of our cars, your warranty is okay, you can get parts, all of this kind of stuff. You can plug this in, it'll work. Lucid Motors has so many years of growth you left in front of it, and so many years of technology, proving their technology ahead of them, even though the leader of the company was the chief engineer at Tesla. Yeah, there's brains there. I don't poo-poo that. What I'm coming from is a stock point of view and an investment point of view. This company is going to need billions of more in cash to get to the promised land, and there's no guarantee and there's no reason why should this stock go from where it is now, even the 30s, to $100 a share, and then they can raise 10 billion over there. I don't see any investment funds dying to get in. If investment funds were so excited about Lucid Motors, they would be raising right now at 15 a share, $50 billion. Just how much do you want? But that's not happening. The merger has been announced and all of that. That's fine, and there's some funding going through. That's fine too. But the stock is still way overpriced. It's more than double ahead of the actual merger deal. It was trading at almost 4 times the proposed merger deal. Ridiculous. That is not how you buy a SPAC. It's how you sell a SPAC. It's how you get the hell out of a SPAC. That deal went way too far, too fast, without any hard deal in its pocket. Unbelievable. But hey, unfortunately for SPACs as a whole, this Churchill thing is going to be targeted and pointed at by the CNBC guys and the Fox Business guys and the CNN business people and the Bloombergs and all the analysts and all the professionals. They're all going to go, see, that's the problem with SPACs right there. That's where retail investors get screwed, because they're buying these SPACs, with all kinds of hype, and they shouldn't be doing that. Well, yeah, okay. Somebody was promoting it. Do you see Congress calling a meeting to talk about the Churchill stock? Do you see Ms. Waters calling her? No. Churchill Capital Corp will not be hauled in front of Congress to have a chat about the fact that their stock is $38, having gone public at 10 when they were once at 55. It's just not going to happen. But good news, I guess. Robinhood is not restricting you from buying all the Churchill you want. I guess that's probably okay now. But when it comes to GameStop, well, though that's speculation. We can't allow retail investors to buy into a stock that does 5 to 7 billion in sales now, with 5,000 retail locations, changing into an online retail store. We can't let them buy stock like that. We got to restrict these people. This is ridiculous, because there's a bunch of hedge funds getting hurt. We can't have billionaires losing billions. No. We gotta make new rules here. Uncle Bruce is on a tear. What else is going on? So yes, the markets are under some pressure this morning. maybe it's about time. The Dow is off like 12 points right now. Who cares? S&P down 22. Who cares? NASDAQ down 237 points. Yes, people care. People are caring about the fact that some of the FANG stocks are under pressure. They're not very happy about that. Microsoft is off, Apple is off, and others are off. But maybe they were too high. Maybe that's the answer. Maybe the real reason that some of these shares are dropping low is because they were maybe overpriced a little bit. Maybe, you know, people are just too exuberant and expecting stocks to only go up. That could be the problem. I kind of look at it and go, there's opportunities coming up all over the place. We might be able to get some deals around here. AMC, what's happening with AMC this morning? Has anyone noticed? Let's take a look at AMC right now. That was a mover yesterday at the close and in the aftermarket. AMC right now is showing 681, up 26 cents. Not as good as the aftermarket last night, was it? Is it? It was definitely doing better last evening in the aftermarket than it's doing now. Closed at 650 something yesterday. So yeah, we'll see how it wants to do today. They're announcing that they're opening up theaters here and there, and people are getting all excited, and they're just they can't wait for the good times to roll. I get that. It's all right. On the other side, Pelotons and what is it, Spotify and a few other so-called stay-at-home stocks. I love that new word. Stay-at-home stocks are under pressure because there's good news coming with the fact that people might be able to get out of their house for a while. I keep coming back to this notion that in the long run, folks, we're going to be better off because we can go out. That's a good thing. But these stocks will continue to do well. These companies will continue to do well. They've now set a footprint, and there might be a few months of people ignoring the Peloton a little bit, but they're coming back to it because they're going to be eating again out at restaurants and gaining weight. They're going to be eating that junk food, and they're going to need to work that weight off. Thank you, Dad. Boy, Louis. Hey, Uncle Bruce, should I max out my Roth IRA every year? It depends on your stock. It depends on your tax situation. It depends on your earnings scenario. It depends on your state, local, and federal tax scenario. I cannot give you tax advice from Canada to you in the U.S., but I will say that here in Canada, we have what's known as the Registered Retirement RRSP, the Registered Retirement Savings Plan, which is where you can you can invest up to, I think, 18% of your annual income, up to some 20-odd thousand a year. And every dollar you put in there, you can take off of your gross income so that you pay less in tax. So if you're in a 35% tax bracket and you put $1,000 into your RRSP, you get to take $1,000 off your gross income, which will reduce your income tax by $350. So in effect, you're going to get a $350 refund from the government if you've paid already during the year through deductions. And so there are Canadians every year who go, I'm going to put $10,000 into my RRSP, and I'm going to get a $3,500 refund from the government of taxes I've already paid on that $10,000. I'm going to literally borrow the $10,000 from my banker. I'm going to put the 10 grand into my RRSP, and then when my $3,500 income tax refund comes in, I'm going to give it to my banker, and now I only owe my banker $6,500 against my retirement account, which is worth $10,000. And if I take the $10,000 and do what Bruce says, and I buy a Home Depot or IBM or ETFs or whatever I'm doing, but if I buy IBM and get a 5.5% yield on $10,000, I'm bringing in $550 in dividend income inside my RSP, tax-free, because whatever grows in there is tax-free. But it only cost me $6,500 to get it because I got my $3,500 back from the government. Now I owe my banker $6,500. I'm going to pay my banker $500 a month for 13 and a half months, 14 months, and that loan is paid off in full. And so a year from now, I don't owe the banker anything. I have $10,000 in my RSP. It's earned $550 in dividend income, tax-free. It's worth $10,550. If the stock, like Bruce figures, might go up a little bit, IBM goes from 120 to 150, which it's done before. that would be about almost a 30% increase in value. My stock would be worth 13,000. So my account would be worth 13,000 in stock, 500 in dividends. I'll be worth 13,500, and it cost me $6,500 out of my pocket to get it, which I've already paid back to my bank. That is called smart tax planning and long-term retirement investing. That's how it's done up here. If that's how it works down south, great. I don't know about a Roth IRA. I don't know about the other tax vehicles you have down there. You got to talk to your tax advisors about that. That is not my purview. I cannot give you advice. I can only tell you how it happens up here for some Canadians with respect to registered retirement savings plans. Now, in the UK and in Germany and France and Denmark and Netherlands, wherever you live, you've got your own version of the national whatever plans. You've got to have tax advice from a professional in that area to help you out. But that's how it can work here in Canada. And there are people who every year will do this. They will borrow $10,000 every year or whatever amount for their RRSP, do exactly what I just said, throw the money into there, get their refund, throw it at their banker, and then just make monthly payments on the rest, and acquire quality investments that might be in Canada, Royal Bank of Canada, for example, or Bank of Montreal stock, or a collection of bank ETFs. They're looking for yield and security and long-term growth, and they put together that kind of a portfolio inside the retirement plans. And every year they just plow these dollars in there while they're working away at age 25, 35, 45, 55, get up to the 65, 70 range. And the hope is, after 30, 40 years of plowing money in there, you put in there $500,000, 10, 12,000 a year, inflation adjusted. It's compounded and grown every year, and you've got $1.5 million sitting in your RSP that now you're going to look at and go, all right, I'm going to start taking money out of here to retire on, plus my pension from the government and whatever else. Yes, that is how it is done here, and can be done if you play your cards right. How do you pronounce this? How you doing? HX, thank you for this donation. Hey, Bruce, can pre-market trading be halted the same as it can halted during the day? You're my favorite boomer. Yes, it can. The company, the public company, could request their stock to be halted. The SEC can request and demand a stock be halted before markets. Absolutely, in pre-markets or after markets. Yes, that can be done. Imbalance of orders. Not so sure about that on pre-market, post-markets. I'm not familiar with those rules. These pre-market trading markets and after-market trading markets are run by bots and computer systems and entities that are not the New York Stock Exchange or NASDAQ. And so I'm not familiar with their inner workings as to how that all goes. Laura, thank you for this donation. Good morning from Bonner's Ferry. How you doing? How about boring old Ford Motor Co? Love my Home Depot. Boring old Ford Motor Company. The company that did not reach out to the government for a bailout in 2008 and 2009, that survived the downturn. The stock went way down, but they survived it. They are, they're a company that have made some interesting moves in the last 3 years that I have paid attention to. One of which was they announced a number of years ago that we're not making cars anymore. The Ford Motor Company doesn't build cars. They only build SUVs and trucks. They don't make cars. So goodbye to the Ford Taurus and goodbye to these other vehicles. Amazing. We don't make automobiles anymore. That's it. They're going electric. Completely overnight, no, but they're phasing over like GM and others. Way to go, Ford. The upside of the stock and the upside of the company, that I can't answer. I'm not following the in depth into Ford Motor, but it's a company with dealerships across the world. I mean, let's face it, they're international. They're not just North American. They're global. They do produce vehicles elsewhere, passenger vehicles outside the U.S., but not inside America anymore. They make their money on the trucks, and the number one selling vehicle in North America for the last 20 years, the F-150 pickup truck. Let's get right down to it, folks. Americans and Canadians love their pickup trucks, and it's the number one seller. If you're an 18-year-old kid You're a 22-year-old college grad, and you've got enough money coming in now to be able to get your first vehicle, and you can afford a used Ford truck or a new one. You're cool. You're considered cool if you own an F-150. And if you're in your 40s, you can pick up that F-150 or the F-250 or the F-350 with all the bells and whistles. You're cool. You're considered cool. Yeah, the fact that you're burning fossil fuels like there's no tomorrow just doesn't seem to matter. Environmentalists don't think you're cool. All right, let's get that figured out. But if Ford is going to invent and deliver an electric version of the F-150, so from the outside it looks like an F-150 more or less, but on the inside it's all electric, that is going to be a major hit. I've been amazed personally. Why has Tesla taken so long to get a pickup truck out the door? I don't know what they're waiting on. I don't know what they've been waiting for. I know they're doing one. They've released the look of one, but they have not released. I'm thinking they're 3 years behind the 8 ball. And again, maybe it's billions of dollars needed to build factories and production lines. I get it. I mean, again, Tesla has been breaking all the sound barriers all by themselves and leading the way forward. You know, a pickup truck is coming, but I can see Ford in the next 5 years, GM in 5 years, coming out with pickup trucks that look very similar to what we've been driving for decades, but they're all electric. It will be interesting to see. But for Ford, like anyone else, billions of dollars are being invested into the engineering and the design, and then the tooling up, and then the prototype designing and getting the glitches out. This is going to take a lot of cash. Ford will be able to afford to do it, but getting them out in numbers will be the secret to success for anyone in this business. You can't just produce 1,000 Ford E150s, electric 150 trucks. You will make no money. You will lose money on every truck you make. Tesla figured that out with their first cars, obviously, but Tesla knew they would run into that. They knew that when they produced the Model S, they weren't going to make money on the Model S until they got to a certain number of units every year, and that happened with the Model Y, and then the Model 3, and on the Model X and so on. But now Tesla is at 1 million plus vehicles a year. They're going to go to 2 million, 4 million, and the dollars are in the volume. Same for Ford, GM, and anyone else. You're going to have to get to numbers, and you're going to have to be price competitive to convince North Americans to say, yeah, I want one of these, and it's 5,000 more than the gas version, but you know what? I'm interested. And if governments do the right thing and tell truck owners, you want a gasoline operated pickup truck, it's a $2,000 additional annual license fee. You want an electric truck, no additional license fee. That will convert everyone to electric. You have to force them out with penalties to really do it. And if the performance is there, the torque, the acceleration, reliability, cost to operate, fewer parts, then it's an easy move from one to the other. But you've got to convince the rancher in Wyoming, you've got to convince the city slicker in Calgary, Alberta, Canada, to pick up an E150 or the Ram version or the GM version, GMC version. You got to convince them that it's cool, reliable, cheaper to operate, backed by the warranty and all that. And then it'll be a winner. So time will tell. We'll see what happens. Okay, how are we doing for time? 7:11 is the time here. 9:11 Eastern time. We're 19 minutes away from the opening. Let's take a look at the pre-markets again just to see where we're at. The Dow looks like it's down, indicating down 16 points, 0.05 of a percentage point. Even yesterday, the market was down, almost 100-something points, and it managed to have an up day during the day yesterday. S&P down 21 points, down 0.5 percentage point. NASDAQ down 209, down 1.5. Remember, folks, stocks sometimes get oversold, and it won't surprise me today. It would not surprise me if during the day, NASDAQ does the turnaround. Because it's not down 500 or 600 points this morning. It's only down 200 points. I have a feeling that NASDAQ sell-off might be running out of gas. And we have a wishy-washy opening, a consolidation for a half an hour to an hour, and then we may have a NASDAQ that starts to come on because the bargain hunters are coming in. Folks are sitting on the sidelines going, well, how much lower is this Apple going to go? How much lower is Microsoft going to go? What about Tesla? Is Tesla coming into an attractive buy range? I mean, some people are calling for Tesla to go down to the 600s, down to the 500s. What if Tesla, doesn't quite go that far? And maybe some few folks are saying, they think that Tesla will go from 669 where it is now to 559. What if it only drops to 630 and then does the $200 turnaround back to 830? Would you be happy flipping Tesla from 630 to 830? A lot of people, I think, would, and a lot of option traders, I think, are playing that game too. So I don't know. We might see a turnaround on the NASDAQ here because of the oversold condition. What is it? 5 days in a row now we've had a down day. After a while, you get just too much, and everyone gets on one side of the teeter-totter, and it goes that way. Tomac, $2,000 to own a gas vehicle. That's insanity. I literally have my Cybertruck pre-order deposit in. What the heck? Yeah, haha. In Europe, they figured out back in the 60s and 70s how to convince Europeans not to drive V8 and V6 powered vehicles. They made it real simple. It was like even the everyday guy could figure out that, my government would really prefer I don't drive that vehicle. They're not telling me I can't, but when I go to the gas station and gas is $9 a gallon, I just am not going to drive a 350 V8 4-barrel carburetor car anymore. I think I'm going to get myself a 4-cylinder turbo, and maybe I'll even get a turbo diesel high-performance vehicle instead and get triple the mileage, quadruple the mileage, and I still have to pay $9 a gallon, but I go 4 times further, and I've got a real sporty machine here rather than a muscle car, where my buddy over there is paying $300 to fill up the tank, and I'm paying $100 to fill up my tank, but I go 4 times further than this guy does. He's on the pump twice a week, and I'm on the pump maybe once a month or every 3 weeks. That's how you do it. That's how that's going to happen. Laura's asking Bruce, how do you think the market's going to react to Jay Powell speech later about inflation? They're not. You want to listen to this guy? You love watching paint dry. There are people who will pay attention to what he says, but they're the walking dead. These folks are just, I'm listening to Powell for 2 hours talk about inflation. Folks, if you think that we're going back to 1970 inflation rates, think again. It's not going to happen. The economy is not strong enough where prices can just pop up 15% overnight. It's just not gonna happen. This is such an overreaction. It's typical though. This is a stock market made up of bored people. I'm telling you, people are bored to tears. They're stuck at home. They're bored. They can't go on a trip. They're bored. They're holding back purchases because they're bored. The markets were at record highs last week. They're bored. When's the last time the guys at CNBC got all excited about the Dow hitting a new all-time high? They just go, yeah, the Dow's a new all-time high. Ooh. They need a correction to get something going. They need action. So they're looking for it. They're looking for some reason, some excuse that something really exciting is going to happen. And so now they're leaning towards Powell at the Fed. I mean, we're talking desperate. When you're looking for that guy to give you something to get excited about, you are really desperate for something to happen. This is a good thing, actually. I consider this really good. If the chairman of the Fed is the most exciting thing on television for the markets, that means the markets are solid. The economy is in good shape. Yeah, I think we're okay. It's just Bruce ranting here. Hang in there. Who is this here? Matt Cow, 809. Thank you for the donation. I have shares in a brokerage account. Is there a way to register these shares in my name, or was buying directly from the transfer agent the only way? Well, in my day, you could order the certificates and literally have them mailed to you by registered mail, or you could pick them up at your brokerage firm. You can put them in street form nowadays. You can tell the broker, please put my shares in street form. And then they would be, you could have them in a cash account. If you don't want your shares to be, quote, shortable or borrowable for a shorter, you're going to have to talk to your broker directly, the brokerage firm directly, about what the rules are here. Because nowadays it's all electronic. The transfer agents who used to literally, they would, when I was the president of a publicly traded company, I used to have to talk to these guys, and they would ask me, they'd say, look, we have in-house here about 50 stock certificates, blanks of your company, and we're printing about 15 a month, 15 certificates a month. You've only got a 3-month supply. We think you should order another 100 blank stock certificates that, you know, we'll print out when the need comes, so that we have an inventory, because it takes 2 to 3 weeks to get the order into the printer and get them back. They would cost us a fortune. We, the public company, had to pay the price of printing these dang things, and we're only getting 100 done at a time, and they're counterfeit-proof papers. I mean, these are really expensive. That's like $1 a certificate or more, and I would just dread it. And I'd say, well, you know, how much for 500? I mean, can't I just order a batch and be done with it for a while? And so I think we did that at the very beginning of our public company. We may have ordered 500 at the beginning, and you get through the first, you know, initial public offering phase, and then the turnover of stock and all of that. But after a year or two, you need more certificates. Nowadays, these transfer agencies, they don't want anything to do with the physical pieces of paper anymore. They just don't. They don't want to be hassled with employees that have to take hours of their days to contact all these public companies and get all these certificates printed and get all the hassling done with the printers. And it's pennies of profit. It's pennies of profit for dollars of time. Absolute waste of time for these guys. They just want it to be digital. So do the clearing corporations. So do the stock exchanges. So do the public companies. They all want it to just be electronic, please. And so this notion of getting your certificate in your hand, it's over. There were times where you would order your broker to send you 1 share of Walt Disney stock, and you would get the certificate, and it would have all the characters on there, and it would all be beautiful, and you'd frame it. You'd frame the certificate and put it on your wall, and you'd give one to each of your children, and the kids each have a share certificate in Walt Disney Company, and they would hang that on their bedroom walls. And the dad would hope and pray that someday these kids will become stockbrokers because they got a stock certificate hanging on the wall. They think, you know, maybe that'll spur the kid on to go into finance. And, you know, I, the construction worker, have a child that's a stockbroker, and he can take care of me when I get older. Those days are pretty well over. But anyway, I hope that answered your question. To register them in your name, talk to your broker about that and figure out if that's even doable anymore. I'm not 100% sure. Eddie Fitness can't wait for me to talk about Churchill. Just can't. Oh, just dying for me to talk about Churchill. I should just ignore it to piss him off, don't you think? What can I say? I've already talked about Churchill. Weren't you here at the beginning of the show? Eddie, where are you? I thought you were on top of the world here. You're on top of my channel. You're putting all kinds of comments in there. I thought you'd be with it. Anna, how you doing, Anna? Thank you for this donation. Any option on Palantir? What do you think about opinion? What's your opinion on Palantir? I don't know the company deeply, like, you know, intensely. I don't know them, but I know of them and that they have a pretty serious partnership with IBM. And both parties are very happy with this arrangement. Something tells me that Palantir will do very well by that partnership and others that they're setting up. I did note and had seen an interview of an early investor of Palantir, who was giving a number of reasons why he liked the stock, even though it's down from its highs. He came up with some very strong corporate reasons why he felt that the medium to long term would be very good for the company. I do note, though, the shares had a run and have backed off. But if you're a long-term holder, I think you're dealing with a company that's going to be around a long time and will continue to expand its services and diversify its business. So that IBM contract is a sign of I would say an indication of legitimacy is what I would call that. That's something you want to promote for sure. If you're a company that you have a business partner called International Business Machines. Yeah, I'd be doing that. Thank you, everybody. Let's see here. SAPO Virgin Group acquisition 12.18 in the pre-market. That's called a scream and buy. I would be definitely looking at that as an opportunity. Let me take a look at all the stocks if I can. Let me just take a peek here. Pre-markets, we got 8 minutes before the market opens. IBM is down 49 cents to 120.73. That is a long-term buy. No risk there. The SPAC, Fortress Value Acquisition, FAII, at 10:36 this morning, down 11 cents. It backed off over the last couple of days. This is a buy. If you're looking for a hold, I like the merger of the company that they've arranged. Fortress is merging with ATI Physical Therapy, 860 physical therapy centers. This company is going into the medical field, and I think long term their cash flows are going to be significant. And I think you've got yourself a winner. You pick this up. These prices here around 10. These are deals. Starboard Value, that would be SVAC, another SPAC. 10.43. This is buy range. This company went public at $10 a unit when they created the SPAC. They've now announced their deal. They're merging with the I think it's called Sextra or Sextra, Cyxtera. Sextra has 60 data farms that they run, and they're a major concern. This is a $3.4 billion company upon the merger. You want to buy this stuff. 10.43. This is a gift. This is a limited time opportunity to get into a SPAC at almost the issuance price, and you already know what it's going to become once it's merged. I don't think there's any risk here. I really don't. I mean, the pessimists out there going, well, it could go to zero. Yeah, okay, it could go to zero. 3.4 billion value corporation with 650 million cash on the initial funding. It isn't going to zero. This is a buy, and this is the kind of risk you want to take with a SPAC. No risk. That's it. And Fortress are two. Gore Holdings is another one that I like. Where are we? Here we are. GHVI 1887. Thank you very much. Down $3 today. What a gift. What an opportunity. Get this stuff. Pick yourself up some Gore Holdings now. You don't have to pay $25 for it like you would have last week. You can get in here now. This is a limited opportunity. I don't think this is going to last long at these prices. I do not expect this to drop much more from here, if at all. This might be a very short-term opportunity to get it because that merger with Matterport is a winner. It's going to be a street darling, and I think it's going to do very, very well. Where's my friends? Hang on, let me just kind of get some more here. Hang on. Where am I? Okay, SMH, the ETF, VANIC Vectors Semiconductor ETF. If you believe that there is a chip shortage, and there is global, buy this stuff right here, SMH. Put it in your account, sit on it, and enjoy the ride, because this company invests in at least 60 chip manufacturers around the world. And I think this ETF is going to do rather well, as will all the chip companies associated with it, but you don't have to guess which one will do the best. Just pick up the ETF and you've got yourself covered. You can sleep at night owning this stuff. Where else am I? IBM, I've talked about. Hang on a second. Let me see, what else am I going to mention today? Looking at my stocks here that I've been talking to you about. Home Depot, pick up Home Depot, $269.89. Put that away. And then there's VGAC. That would be the Virgin Group Acquisition Corporation. Let's take a look here. VGAC. There we go. Get that up there. 12.21, down 71 cents. Buy time. Thank you very much. This, again, is a limited window. All of these SPACs that I'm recommending to you are, in effect, in the middle of their mergers between their SPACs, the public company, and the private companies. And each one of these deals takes about 60 to 90 days to complete. And so having found out what the deal is, what the company is, and what they're going to do, you've been given about a 60-day window to pick your spots to get into these SPACs. And if you can get in them between 10 and 15, great. 10 and 12, unbelievable. As far as Gore Holdings, I don't think it's going to give you an opportunity at $10 or $12, but it's now at 18. This is a gift from the $25 spike you just saw last Friday or Thursday, was it? That's just an indication of what's coming for Gore's Holdings once they convert into Matterport. That's just a taste of what you're going to get. This is an opportunity. The flippers have flipped out, and some of the speculators are just walking away right now because it's not happening right now. This is your chance to take your position. Sit tight and enjoy the ride. We are getting close to opening, 3 minutes away. We're going to take a look here, what's going on. We're finding out that we're going to see the first earnings report from Airbnb shortly. I don't know if it's today, but soon. We'll watch that. Johnson & Johnson is targeting 20 million dose delivery of COVID vaccines next month. That's all good news too. The Dow looks like it's pre-opening towards the end of the opening here, or sorry, end of pre-opening, getting ready to open, down 41. S&P down 26, NASDAQ down 236. This is not enough bloodletting to tell me there's a really bad market on the horizon. This is telling me that we might be bottoming out here for a turnaround because we might be in a pretty oversold situation here going into the next day or two or three. GameStop 45.13 is the pre-market range at the moment, down 87 cents from last night's close. It was in the 47.30 range this morning, 47.40 range, and last evening it was even upwards of 48. But at the moment it's coming through here at 45.13 or so as we're getting ready to open for trading. There's Kramer talking about Home Depot right now. They're talking about Tesla extending losses. The shares are lower, and they're talking about that. Again, a stock that gets sold off too quickly can turn around awful fast on the other side. So do not think that it's all over for Tesla. 661.99 on the end of the pre-market for Tesla, down 52 bucks. Again, it was as low as 651 this morning a few hours ago. $10 lower. It did come back up to that 682 range. Now it's 662, and we'll find out how the markets open here in just mere moments as we get ready to start trading for the day. Interesting stuff. As I say, there are deals, and then there are steals. And that is what is happening out there. Watching the final numbers of the U.S. futures going through, very light losses on the two big markets, S&P and Dow. NASDAQ down 217 right now, watching for the opening here at any time. If the NASDAQ is showing only down 217, that's an improvement of 20 points in the last 2 minutes. We might already seeing a bit of a buy wave coming in right on the opening. We'll find out. Here it is. The bell is going right now. They're clapping their hands on Wall Street. We're back, baby, for another day, another session of trading. Let's see what happens. I'm going to pop up Tesla here, just get a peek at it, see how it wants to perform, and see if we get an update here. Showing the Dow up 27 points right now, on S&P down 30, NASDAQ down 341. So the initial prints are not pretty, but we have to wait about 5 or 10 minutes for the market to open up across the entire spectrum of all the stocks to see what we're really doing here. It's too early to tell at this moment in time. Let me get my phone up, and I'll take a peek over here and see what my pricing looks like. Here we are. AMC at 681. It's up 26 cents to start the day. So we got a winner on AMC to start the morning. We have GameStop at $45, down $1. We have Virgin Acquisition at $12.24, down 68. Gore at $19.02 at the moment, down 294. Fortress at $10.31, and Starboard at $10.45. That's our first indication at this moment in time. The Dow down 86 points at this moment as well as it's figuring itself out. Carnival down to 25.13. They announced a $1 billion financing after the bell last night. If you were here, you were with me after the close last night, you heard that news. 40 million shares are being sold at about $25.10. That is a done deal. That is a bought deal. It's over. The stock's been placed. I think Goldman Sachs did the deal. $1 billion going to Carnival's bank account at $25.10 a share. Other cruise stocks, let's see, how are we doing here? Are they hiding on me? Royal Caribbean up 36 cents to 86.59. Norwegian up 3 cents to 28. So they're not doing much at this point in time. Another peek at the markets here. GameStop now only down 63 cents at 45.37. And AMC up 73 cents to 7.28, getting a bit of a boost there. Over on Tesla, down $40 to 6.73. Tesla is actually coming up from its opening. Let's see how that plays out. It was as low as $6.57, now $6.74, only down $39. That might be a bit of a rebound there. We'll watch and see how that plays out, and we'll just keep an eye on these markets and see what's happening. That's what we do. The Dow right now down 90, down 108. S&P down 29. NASDAQ now down 272. That looks like a 50-point recovery, but it's really, really early, only a few minutes into the market. We have to allow these markets to find themselves and show us what they really want to do. As I said, the first half an hour to an hour might be a bit of a washout as we cleanse house, and then I have a feeling we may find that the selling stops, and all of a sudden we might have a bit of a rebound the other direction. We'll keep an eye on that. GameStop now $46. Sorry, I'm incorrect. 46.02. Yeah, 46.20 is where it's at on GameStop. That's what I'm showing. That's up 20 cents now, so it's a little better, but it's just jumping around here between 45.50 and 46ish or so as it finds itself as well. There you have it. Let's go over here to comments. Let's go. Our opinion on leveraged ETFs for when the market is bad. Yeah, I'm not a fan of leveraged ETFs. I've looked into them occasionally, a little here, a little there, and I just don't see good things. I keep reading stuff about where analysts are saying these are only good for day trades, momentum trading during the day, and I just avoid that because you try to predict momentum trading minute to minute in a volatile market, and you are playing with fire. You might be a winner and a winner and a winner, and then you have one loser, and you're down more than you won all day long. So I'm not sure about this. See what's going on. Has the cost of GameStop bonds risen, or does that debt market still think GameStop is failing? GameStop has more cash in its bank account than it owes to its creditors. They don't have a debt problem. They really don't. GameStop does not have a debt problem. Matter of fact, I believe that when GameStop, and they will start selling off stores, they'll take a country like Australia and New Zealand, and they'll sell the entire outfit, the entire store, the entire retail outfit to a retail operator. The cash that they get for these sales, and they'll do this in Europe and the UK, 500 to 600 million is expected to come in. That's more than what they owe as well. So they don't have an issue, and I don't know what their bonds are trading at on the aftermarket. I don't watch bond values like that. That's a world that I'm not familiar with, but my hunch is that if GameStop has enough cash on hand to just pay off the bonds entirely, there's no issue with the debt for GameStop. I mean, if they owed $10 for every dollar they had, or they had $5 billion in debt and only $100 million in potential profit, now that's a problem. But they don't have that situation whatsoever. All right. Hit the like button for Bruce. Thank you, everybody, for doing that. We've got 361 thumbs ups already on this show. Thank you, everybody, for that. We've got about 1,300 of you watching today, so we could use 1,000 thumbs ups from 1,000 of you out there. That would be really nice. Put this show on a real testosterone run with YouTube. If I had 1,000 thumbs ups already with only 1,300 people here, that would just drive the analytics crazy at YouTube headquarters. crazy in a good way. We're now at 423. Thank you guys for reacting to me. I appreciate these thumbs ups very much. They really make a difference for the channel to be discovered. What else have we got going on here? Lisa, what other books, websites, channels do you suggest for beginners besides your amazing channel? Boy, you know, I have to admit, you know, you do a search, like a YouTube search for, you know, Market 101 or you know, markets for dummies or stock markets for beginners. You'll get results, you know, you'll get, but can you find a live presenter talking to you in plain English every day about what's happening in the markets? I don't know of another one unless I'm missing, but then I haven't got time to look around. I'm here 3 hours in the morning, 2 hours in the afternoon. I'm kind of busy, but you know, you can do Google searches for certain terms and technology or terminology, I guess I should say. So if you come across, you know, a term that you don't understand, you can do a Google search and it'll give you the definition, but then the definition might be so complicated, you know what the hell that means. I get you. I hear you. I really don't have any other suggestions to throw at you other than what I've just said. Google searching is a way to go, or YouTube searching to see if you can find someone who's you know, explaining to you the nature of a short sale or you know, whatever else you're trying to do. I do what I can. Cindy, if you hit the thumbs down button, hit it again and it'll go away. It'll hit it once, hit twice, it just reverses. I saw one YouTuber once say, if you like my videos, hit the thumbs button. If you hate my videos, hit the down button twice. I love that one. What else is going on? Stop limit orders are confusing me. There's nothing to figure out there. It's easy as pie. A stop limit order is, or a stop loss order is exactly what it sounds like. It's a stop loss. You stop the losses. If you buy a GameStop at $43 a share and you put in a stop loss at $41.90, the shares will sell out at $41.90 if they get down there. It'll be basically, it becomes in effect a market sell order at $41.90 or whatever price you pick, and you're limiting your downside risk. If the stock goes from 43 to 48 and you move your stop loss up, you change it and say, I don't want to offer it anymore at $41.98. Or $41.90. I want to offer the stock now at $46.10. It's still a couple bucks behind where it's trading at, but I'm moving up the sell order. And if it continues to go to 53, you might move the sell order to 51.05. And if the shares do back off to 51.05, you're taken out, and you've limited the loss from the high point. Whereas right now, at buying it at 43.20 and putting in a sell order, a sell stop loss at 41 something, you're limiting your stop here. So you're limiting a loss from an entry point of 43.20 to an exit point of 41.90, say. But both of those numbers could change if you get taken out. You're out. You've lost a little money, but you didn't lose everything. And if the shares go to $35, you are out at 41, and now you're sitting there going, oh, it's 35 now. Seems to be settling in. If I buy back now at 35 and I put in a stop loss at 33, I'm only risking a couple of bucks a share on this investment. But now, if you're right, the shares backed off to 35. They seem to have bottomed out, and they come back to 38, 39. You may take that stop loss and you might change it and move it up now to 36, which is $1 more than you just paid. Next day, shares are trading at 40, you might move your stop loss to 38, which is $3 more than you just paid. And if you do get taken out, you're out at 38. You made $3 on that trade, that what you just did, and you got $3 back from the $2 you lost before. You're actually up $1 on your in total investment, and the stock isn't even back to 43. It's at 38 or at 36. That's how this game can work in your favor. Even if you are playing a stock that is not performing for you, you can still make money on the stock with stop loss orders that trail the price of the stock, trailing stop losses. Some of these firms will offer you automatic stop loss limits where you can, I think you can sort of set it and forget it, and you decide I want to be $1.50 behind the value of the stock. I always want to have a stop loss behind it or something like that, or I want to be $1.50 behind where I paid for it, or You can, like I say, you can change it, you can set it. It depends on the firm you're with. It depends on the house you're dealing with. It depends on the platform they're offering. And that's where you have to do some homework. But stop losses are a smart move to protect yourself against violent down moves. That's what they're about. That's what they're for. And for some of you, it might be perfect. For some of you, it might be too onerous, too complicated, too much of a pain in the rear end. You don't want to be that involved. You just want to buy it and leave it alone and not worry about it. Well, okay, but if you don't have a stop loss and during the day some catastrophic event happens in Washington or Berlin or London or Tokyo or whatever the heck, sometimes markets drop on an event that has nothing to do with your company. Nothing. You're just sucked in with the vortex of a market that's going down for an hour or two. If you have a stop loss, you're out within, wherever you want to be out at. I mean, like I said, if the stock's 43 and you put a sell order in at 41.02, you're out at 41.02 or so the minute it gets there. But if the market takes the market drop takes your stock to $36, you're alerted. Oh, I sold at 41.02. I sold. Oh, what's going on? Oh, it's trading up 39. It's trading up 38. It's trading up 30. What's going on with the market? You figure out what's going on and you realize, it is an event. Maybe it's a terrorist event or something happening in somewhere else, has nothing to do with your company. You're now watching to see when you can buy your stock back. And you're waiting for the market to kind of settle down. And then you immediately jump back into the position that you had before. You got out at 41. You're buying in at 36. That's $5 a share less. You can buy just as many shares you had earlier in the day for $5 a share less. So you certainly have the money to replace your position. So if you just replace your position, say you had 100 shares, you're buying back 100 shares. You're literally at the end of the day sitting on 100 shares of GameStop and 500 in cash, wherever the stock's trading at, because you got out at 41. Now, if the stock closes at 39, it bounces back to partial recovery. You're sitting there going, okay, well, I was in it this morning at 43. I got out at 41. I got in at 36, and it's at 39. How am I doing? You're doing all right. If you didn't do anything, you just had the stock and you did nothing, you went from 43 to 36, close to 39, you're down $400 because that's the difference in the price of the stock from yesterday to today. But if you've done these moves that I've just described, in at 33, out at 41, in at 36, now sitting at 39, you're ahead of the game. You're ahead of the other guy. Even though both shares are at $39, both investors have 100 shares each. One made moves, one did not. The one who made moves made money. And that's this business. And that's how hedge funds and mutual funds and pension funds make money, especially hedge funds. Fast trading, very heavily monitored hedge funds. This is how they make money. They also make money by holding stock at 43 and writing options at 45 or 46 or 47, good for a week or two or three. And then when the stock does go to $36, they buy the options back for a fraction of what they just sold them for. And then they sit back. They may have already done their stop losses as well. They got out of the stock. They bought the options back. They cashed in. They're waiting. The stock drops off. The market's stabilized. And they jump right back into their stock position and put a stop loss in that behind it, a couple of dollars behind it. Shares recover. They start writing options all over again for 1 or 2 or 3 weeks at $3 or $4 above the trading value of the stock. This is active trading, and it is monitoring your portfolio, and it is smart investing if you've got the time to do it. And that's why hedge funds hire people to do this all the time. It's all they do. And that's what you have to do to stay ahead of the other guy. Donation from, I'm not sure if this is Mr. T or Ms. T, but T has made a donation and is saying, Brucey, do you know whether a 10 millimeter heating valve pilot washer would fit a spiral line circuit breaker? Still trying to fix that bloody heating system. I can't answer that question, but I will take the donation. I really do appreciate these super chats. We appreciate these PayPal donations that you folks are making to us. I do appreciate the question, though. I respect the question, but I have to honestly refer you to perhaps an electrician or a plumber who's a specialist in this field. But don't stop making those donations because they are very much appreciated. So, oh my gosh, I love it. Let's see. What else is going on? A stop loss order can screw you on the bull market, though. How is that? How is that? A stop loss order, you know what? If a stock, it goes up and backs off and goes up and backs off and goes up and backs off, it's theoretically possible that you could have bought the stock here and set a stop loss just behind it. And then the stock fluctuates enough that you got taken out because you put your stop loss in too close to the actual price. Okay, so you're out. And then the stock pops on you and you miss the run. That can happen. Sure it can. On the other hand, if you have enough a range between buy and the stop limit to eliminate the regular fluctuation, daily fluctuation of a stock, then you're playing it right. But if you're playing with a hair trigger where you're buying a GameStop right now, it's at 42.10. You buy it at 42.10 and you put in a 42.05 stop loss, your odds are you're going to get taken out because this stock can fluctuate 25 cents per trade within a minute easily. So buying at 42.10 and putting in a 42.05 stop loss, not a good idea. Buying at 42.10 and putting in a 40.10 stop loss with a $2 limit behind it might be the right move to make. And that is about a 5% limit loss is what you're willing to tolerate. You're willing to risk 95% of your money on a trade, but no more than that. So that's $2 less than where it's trading at. That might save you from a dip and then a bounce back right away. But you have to pick your spots. Right now, the stock's down 435 on the day. So you got to ask yourself, is this the low of the day for GameStop? If I buy this at 41 something, 41.70, and I put in a 40.10 stop loss, am I going to be taken out, or have I given this stock enough time to settle down? Because this hasn't settled down yet. Is the low today going to be $40? That's maybe where you might be taking your buy limit. You might be waiting now to buy it as opposed to buying it here and putting in a stop loss. 41.01 right now, dropped again, another 70 cents. So you gotta really, you gotta just pay attention to how the shares are doing for the day, for the moment. We are in the market right now, 18 minutes. Too early to figure out a pattern. I can say though, with conviction, the market is finally showing some red. The Dow is off 216 points. The S&P down 56, and NASDAQ down 516. Finally, there's some real selling finally coming into the market, which is a good thing. We need a flush out. We need this market to get a real sell-off and get the loose holders out. Got to shake the leaves off the tree that are ready to fall. Get them off of there, and then we move on. But this might be the flush out we've been waiting for, and we may have a bounce back from these levels or around these levels of gargantuan proportion for the rest of the day. I could be wrong. We might be going straight down another 1,000 points, but I'm not sure if that's going to happen. I don't know if there's enough volume to really scare out everyone from this market. I don't think so. By the way, Friday is the expected day of the passing of the stimulus package. $1.9 trillion will pass Congress on this Friday. And then all weekend long, what are you going to know? What are you going to see? You're going to be on all those talk shows on Sunday, those so-called political talk shows. Watch it. All the Democrats will be coming out saying, yeah, we passed this CARES Act and we're going to push it through the Senate now and get Americans the money they deserve. And all the Republicans are going to go, oh, this is way too much money. It's going to cause inflation. It's going to cause all kinds of heartache. It's going to be the worst thing ever for the country. We should not give poor people money. This is the dumbest thing we've ever come up with. And you have to decide for yourself, which way do you want the country to go? It just kills me. Instructions unclear. I bought more GameStop. 40.82. It's a better buy now than it was last night at 48. I gotta admit, it's on sale. But you gotta have a conviction here. You've gotta be committed. You've gotta be saying, I don't care what this market does. I know what I want. I know what I'm investing in. I know what the company is going to do. And no matter what this stock does, I'm not strong diamond hands. You're not shaking this stock out of me. I'm holding it. I'm going to run this thing out. And wherever the stock goes, I will be there. At 40.40 right now, down 560 a share. Is it a bargain compared to 350 a share? Well, probably. But is it a bargain compared to $5 a share last July? it's still 8 times higher than it was in July last year. Remember the short seller Andrew Left that said when the stock was trading around $40 a share, he called it was going to go back to 20, and it went to 80 instead. And then he bought all of his shares back at a massive loss. Here it is at 40.77, still hasn't gone back to 20. The analysts and the pros on these television networks were saying as soon as it backed off from the 300, 400 range, it was going to go right back to 15, 20 bucks a share. It's at 40. They're close. I will give them that. They're close, but I don't know. Has it crapped out? Doesn't look like it. Volume is kind of heavy this morning. Let me take a look here on Gamestop now. Well, not even 2 million shares. I'm looking at the wrong decimal point over here on this site. 2 million shares of volume. Not a lot to be talking about here. AMC, even AMC is down now. They had a nice start to the day. They're off 6 cents a share. They're down 6 cents a share. Even AMC, when the markets are down 300 and 400 points, will also lose a little bit of ground. But it's probably one of the better performers of the day. Stock deals, Gore Holdings, $16.49. That's a buy now. That is a serious buy. Down $5.40 a share from yesterday. We are getting some loose hands kicked out of here big time. And now you can take a look at Gore Holdings at finally a decent price for what they're going to become. VGAC, Virgin Group acquisition, down $1.77, $11.15. Great bargain here. FAII, Fortress at $10.35, only down 12 cents. Starboard, only down 40 cents to $10.18. These are right near issuance prices. You can take your position here and enjoy a lovely show going forward. You have to tolerate a day like today. Dow is now down 265. S&P down 52, NASDAQ down 444. But I don't really think we're getting massive sell volume coming in here that is going to create an even more of a havoc. But I'm happy to see a flush out finally happen. I am sick and tired of 4 or 5 days in a row with slight losses. Get out, stay out, let's move on. Get these guys out of here, and let's move forward with diamond hands. And we'll see what happens. It'll be interesting to watch to see what comes up as this day continues to move forward. Swash, nice. I sold my GHVI a bit back for an $8 profit share. Now it's dropped. I'll get back in. Exactly. This is it. $16.58. Gift. Absolute gift being offered. Absolutely. Here's another one. Glitch. I sold my GHVI 27. I'm getting back in. Too far, too fast, too soon. Take your money and get back in there. Nothing wrong with that. I like the stream. Thank you, Bruce, says Kevin. Thank you, Kevin. I'm down $2,000 so far. Why is everything red? What is Gore stock you were talking about? I'm talking about Gore Holdings, number 6, GHVI. This is a SPAC that announced about a week and a half ago that they were merging with Matterport, which is the 3D imaging software company where you can sell a house online with 3D imaging and all this. This is the world leader in this area. They're merging in a $3.5 billion merger. Gore Holdings really caught fire when that announcement was made. It was about a $16, $18 stock when the announcement was made, and it ran up to $25 to $27 a share way too quickly. It's come back now to $16.70. This is a buy price for Gore. You can buy this now, and over the next 2 to 3 months, that merger will be completed. Like all SPACs, they take 2 to 3 months to finalize. This will be finalized, and I think there's going to be some real upside here once this is converted into Matterport, share for share. So any stock you're buying here, you will own 1 share of Matterport going forward, and I think you're going to like what you see on your returns. Anyway, there you are. Have you eaten? Yes, I have. I ate before I came on the air. I had my sesame seed bagel toasted with grape jelly from Welch's. So good, hence energy. I'm all sugared up. GameStop, $42.96, just bumped up a little bit here. It went down as low as, 40-something a share, and it's just popped up here a couple of bucks, $42.85, down $3 a share. So GameStop is already reacting the other direction. That definitely went oversold for a moment or two. Gore Holdings pushing 17 again, coming back up. Virgin Group VGAC 1125, low of 1110, slightly better than the low. Gamestop hit 40.34 on the low. It's now 42.49. It just jumped a couple of bucks a share, and so didn't even get down to 40. Too much buying interest, not enough selling pressure to pop down to that level. What else have we got going here? AMC now up 11 cents, so it's back, coming back up on the upside. Royal Caribbean down $1.67, Norwegian down $1.27, and Carnival down $1.32. Finally, some selling, but not enough selling on these cruise stocks. Dow down 246. It was at 31,158. It's now 31,275. So the Dow has recovered 75 points from its low of the day, and now down 246 instead of 320, 330 on the Dow. So that's interesting to watch. A little recovery there. NASDAQ is down 387. Was down over 500. That has also bounced back. So the first wave of selling has come through here. Is that it for the day? Do we now consolidate as the day wears on? We'll see. We'll watch it. Let's take a look at Tesla. How's Tesla doing? Tesla shares. See if I can punch this in right up here. TSLA. Tesla. 648 is the last trade. It got as low as 619.50. Now 647.40, so that's bounced back about 28 bucks a share. Still off 66 on the day. It was down 50 odd when it started today. So we'll see how that one reacts as the day goes on. Other stocks, let's see. Home Depot down $14 a share to $261. That is becoming a screaming buy because they are making nothing but money. Increase their dividend by 10%. There are sometimes gifts given when people throw out everything, including the kitchen sink. And so HD is part of the giveaway today. Very interesting to see Home Depot that attractively priced. Let's go here. Powell is testifying before the Senate committee. Yay, let's watch paint dry. I'm sure the CNBC people will be watching that guy. More power to him. We'll watch the market instead and see what's really going on out there. And anything crazy he says will be reflected in the market anyway. But Dow down 257, S&P down 47, NASDAQ down 381. Let's go over here. Back to GameStop right now. It is $42.99, almost at $43 a share after hitting a low of the $40 range. So that has bounced back quite smartly. Just as quickly as it went down, has come back up again. And let's go here to SMH. Looking at the ETF for the chip stocks, 236.69, down 775. It got down to 232. This is a buy long term if you are a believer in the chip shortage, which I believe there is a worldwide chip shortage. This ETF, I think, will do rather nicely, but you're going to have to allow markets to do sell-offs. You can't stop over-leveraged people from getting back to regular leverage. You have to let it happen, and sometimes it affects some of the high flyer stocks. Making sense to me, the most liquid stocks will be the most sold or bought, depending on whether the markets are up or down. And with the markets having backed off lately, some of these shares have taken a bit of a move on the downside, and that includes some of the chip companies as well. IBM at 120 bucks a share, down 80 cents. Now there's a stock has just not given up any ground. This is why I like it. I like the IBM. It's old school. It's boring. I'm not giving anything excited to get excited about, but I like how when a market drops 200 or 500 points, depending on whether it's the Dow or the NASDAQ, this stock is down 80 cents to 120.06. I kind of like that. The low 119.80. There's a sign. Yielding 5.5% on your money, just on the dividend alone. Kind of protects the stock against the down dip. It really kind of protects the stock. Not that it can't drop 5 or 10 or 20 bucks a share. It could, but it's kind of one of those shares you sell at the very last thing you want to sell is IBM. If you're a strong holder of a big portfolio The IBM, you don't touch the IBM. Leave it alone. Anyway, I think better days are ahead for IBM stock. I do like the upside. All right. Yeah, Bruce, thanks for the channel. Could you explain in plain English the difference between the Dow, the NASDAQ, and the others? Well, the Dow Industrial Average is made up of 30 companies, American companies. So we're talking about Apple, and we're talking about Microsoft, Home Depot, I think Bank of America. We're talking about 30 of the largest cap companies in America that cover a variety of entities, but it's only 30 stocks, and the shares are it's like I think it's called a dollar weighting average. So if Home Depot drops $10 a share, it will have an effect on the Dow. If Apple goes up $10 a share, it'll have a bigger effect on the Dow, because Apple is a larger capitalized company, much more valuable company than Home Depot is. And so if Apple goes up and Home Depot goes down, both by $10 a share, the Dow will be up if everything else is unchanged, to give you an idea of what I'm talking about. So certain Dow stocks have more quote weight against the rest of the index. The NASDAQ index, the NASDAQ 100 will be the top 100 companies, again, listed on the NASDAQ stock exchange, again, dominated by the largest market cap companies. So when we talk about FANG stocks, Facebook, Apple, Netflix, Microsoft, Google, which is Alphabet, FANG, F-A-G. These are the big capitalized Facebooks and Apple and Amazon. These are the large cap companies. They dominate the NASDAQ 100. So if those stocks, or those FANG stocks, go up in value together at the same, today, the likelihood is the entire NASDAQ is going up as well. Even though there are 90-something other companies in the index, they might be flat, down a little, but those big boys are moving, the index is moving. So if Apple's having a bad day, the Dow's having a bad day, NASDAQ's having a bad day. The S&P 500 is 500 of the largest corporations in the USA that make up the S&P 500. Tesla just got added into the S&P 500 about 4 or 5 months ago, finally. You have to be a profitable corporation. You have to have a certain market cap value. You have to have a certain number of shareholders. There's all kinds of factors to get you into the S&P and keep you there. The S&P 500 sometimes drops stocks and adds stocks as they adjust their members. Same with the NASDAQ 100 and same with the Dow 30. Whenever a Dow 30 stock is dropped and another one's brought in, that's big news. That does happen from time to time. But the Dow 30 is really the what used to be the Dow 30 Industrial Index. We used to refer to it as the Industrial Index from the 50s and the 60s. And IBM was a big part of it. General Motors was a big part of the index. General Electric was a big part of the Dow 30 years ago. Now the Dow 30 has evolved to cover computers, software, banking, investment. The Disney company is part of the Dow. McDonald's is part of the Dow. Disney is not an industrial. McDonald's is not an industrial, but they cover a wide swath of the American economy. Coca-Cola is in the Dow 30, same thing. So that's what that is. It's a coverage. But the S&P covers 500 companies, the top 500. So if you want to know, where the economy is, what experts usually say is look at the S&P 500. You're looking at the top 500 companies to see how the economy is doing as a whole. And right now, we have the S&P 500 down 40 points, which is 1% on the day. So today, the overall market, the big market, is off 1%, where NASDAQ is off 2.29% right now. It's down 309 points. But I can tell you which stocks they are. The top FANG stocks are probably all down right now, and they're causing a good chunk of this movement. Same with the Dow as well. Now, back to the S&P for a minute. The top 20 to 30 S&P stock, the biggest market cap S&P 500s have much more power over the bottom 150 S&P 500s. But again, it's a momentum-driven market. You have stocks, these indexes that are very close to all-time highs, and you're going to get these moments in time where you reach a high and you're going to drop a bit to test its support level to see if you reach a new high or not. This is quite normal, quite expected, because when it all comes down to these indexes indicate to us where investors think the economy is going between now and a year from now. That's really what this is. It's an indicator. It's like an early warning system for the economy as a whole. But you can't take only one day at a time as the indicator. You have to look at the long term, look at the indices to kind of get a measure of what is the sentiment of people around the world, investors, is sentiment of economies. And these three indexes do reflect the U.S. economy. The economy of the United States of America is what everybody wants to know about. The Germans want to know, the Brits want to know, the Russians want to know, the Japanese want to know. Everybody wants to know what is the market sentiment of American investors and through those indexes. That's what everyone's watching. We do watch the index from London. We do watch the index from Germany, but they are a mere shadow, a miniature reflection of what the sentiment really is when we watch the U.S. Economic indicators. And that's what these three indexes show us on a moment-to-moment basis. So at this moment in time, this second, right now, on February the 23rd at 8:07 Creston time, the Dow is off 205 points. That's what it is. Down 0.65 of a percentage point. That's not a lot of downside. If the Dow were down 10% right now, that would be really serious. But 209 points on a 31,300 point index, no big whoop. That gives you an idea of how meaningless this move is actually. But it is a down move this morning. That's what it is, and you can't deny it. If you take a look at the Dow Jones Industrial chart for a year, you'll see this right here. This right here was last year, and there is the drop from COVID right there. That's what we got last year, and we went from something like where were we? 28,000 roughly a year ago to drop as low as let's see here, 19,100. So the Dow gave up 35% of its value over all 30 stocks on average in about a month and a half. That's all it took. But then look at the other side, the recovery. It came back to where it was by, let's see here, by June. So by June the 8th, the market was back to 27,500. So from the low in March 20 until June 28th, that's April, May, 3 months, not even 3 months, the market recovered 35%. So anyone who bought down here was bargain hunting, was really laughing here already in June. From June forward, we've had glitches, including this little glitch here, but all in all, it's just continued to roll right along. And so we look at the last month. This is the last month here, here, down and up. Right now, we're still up here. We're way up here. The last week, there you go, choppy, up and down. And then, of course, today, we started here. We hit bottom here this morning, and now we're here. We're recovering to here. Welcome to a normal market functioning completely normally, like it should. We're down at 184 on the Dow right now. As I've been talking, it's popped up 20 more points, and it was off over 300 earlier this morning. So this is how markets work. The law of supply and demand at any moment in time will dictate the value of anything, and stocks are no exception. Shares trade law of supply and demand right this second. Gamestop is right now $42.99. It's trading between $42.99 and $43 a share, because right now there are just as many people willing to buy it at that price, willing to sell at that price, so it's trading at that price. Now, a second later, $42.69, down 30 cents. So welcome to the market. You never know, second to second, how these switch. This is completely acceptable behavior in the marketplace. It can be infuriating if you're trying to pick a price that you're happy with, because the market doesn't care what you think. The market doesn't care what you want. The market goes where the sentiment is going for everybody, all investors. And there's the thing that a lot of people are trying to figure out. They're trying to figure out, I know how I feel about the market, but how do others feel about the market? Do they feel like I feel, or am I on the opposite side? Am I in the minority, or am I in the majority, or am I in the middle and I don't know what the heck is going on? The market is the same way. The whole market is the same way. Stocks on the New York Exchange, on NASDAQ's exchange, and the shares in the S&P 500, they are bought and sold by investors around the world. These are not stocks only traded by Americans. These are stocks traded by every mutual fund, pension fund globally. So do not be surprised when you hear that the pension fund for Japanese school teachers owns Apple stock. Don't be surprised. Don't be surprised if South African pension funds that handle the pensions for railway workers own IBM, or own Intel, or own ETFs, mutual funds. U.S. investments are enjoyed and held and trusted by investors around the world in every time zone. And so now, with the advent of this, to be able to buy and sell stock with this, this has turned the marketing, the investing ability of stocks into anyone's hands anywhere in the world, as long as you've got an internet connection. So if you're living in an RV down in Slab City, down in Arizona, you're watching me on the internet because you have enhanced internet. You can trade stock off your phone or off your tablet or off your laptop in an RV in the middle of the desert, as long as you're getting a signal, anytime you want. And folks are doing this in Africa, in Asia, in Europe, Russia, South America, the Caribbean, Fiji. It doesn't matter. And that is what makes this market what it is. It is the trusted place on the planet to invest money and follow the markets. I hope that helped you. I hope that helped all of you. Anyway, there you go. Is it worth averaging down on? It's always worth averaging down. If you can afford it, it's always worth averaging down on any position you have. It matters not which one. VGAC now is up at 1151. If any of you bought this at 14 and a half, pick some up at 1151. Absolutely. But be prepared to hold it just as long as you were going to hold it in the first place, which I've been recommending 2 to 3 months at the minimum to allow the merger to be done, or longer. If, however, in the next week or so, you buy here at 11.45 a share and they go up to 15.50 a share, and you're sitting there going, you know what, Bruce, you told me to average down this stuff, and you know what, I bought a couple of hundred shares at 11.45, and I have a couple of hundred at 14.50, but you know what, those shares went from 11.50 to 15.50. I think I want to sell those 200 shares that I bought at 11.50. I want to cash out, because if they go back down to 12.50 or $11 again, I'll buy again. What's wrong with that? Nothing. There's nothing wrong with that. You can do that too. What's wrong with taking a $4 profit on an 11.50 purchase? Do the mathematics and you'll find it's a return of 35% on your money. What's wrong with that? Zero. So go ahead. Yeah. Gore Holdings is now 19.28. It's only down 268 now. They were this morning, when I told you folks that they were at buy time, they were at 15.81. They're now 19.30. Did you buy it? Did you average down? Did you have the guts? What can I say? That's a trade right there. But I hope a bunch of you got into this thing as it bottomed out, because that like I said, that is a deal. Under $20, 18 to 20, Gore Holdings is a deal. At 15.81, that's a steal. And who's the idiot that sold at 15.81? Someone did it. Someone sold it. Why? Why were they selling at 15.81? What are you, nuts? But welcome to the market. You're here. You're free to make brilliant decisions, and you're here You're free to make idiotic decisions. Welcome to the market. Try not to be the idiot. Try to be the genius. But if you can work it out somewhere in the middle, you'll probably do all right. Welcome all to Stock Markets with Bruce, where this guy is trying to explain the markets in plain English for you, and I hope I'm doing an okay job for you. Thank you, all of you who are making donations to this channel through PayPal, through Super Chats. I appreciate it. I do not own any stock. I do not own any options. I don't invest in the market. You notice I don't trade while I was here talking to you. I'm only a commentator, and I'm trying to interpret what is happening in the simplest way possible. And I might be repeating myself a few times, but the reality is markets are a tug of war between buyer and seller. That's all it is. When it comes right down to it, one person thinks you're a moron selling this stock. The other person thinks they're a genius buying it. It's just the way it goes. There are morons and geniuses on both sides of the market. It all depends on who you're talking to. And welcome to the world. AMC up 20 cents to $6.75. GameStop 42.88, 42.21, and just 43.21, just popping around here down 2.79. Virgin Group at 11.48 down $1.44. Gore's Holdings down 2.90 to 19.06. Fortress Value FAII down only 19 cents to 10.28. There's no downside there. And SVAC Starboard Value 10.45 down 13 cents. Also, very little downside to worry about there, having the fact that they went public at 10. Cruise stocks, cruise shares. Royal Caribbean recovering, only down 16 cents to 86.07. Norwegian down 81 cents to 27.75. Carnival 24.90 down $1.08. They're just doing a $40 million, 40 million share, $1 billion financing at 25.10. That deal is done. They have put $1 billion into their cash register, which will last Carnival 50 days. They'll burn that money off in the next 50 days, 7 weeks. That money is all gone, because that's what it costs to keep 96 cruise ships in the water with a skeletal staff and run the corporation in the meantime. It's $610 million a month to keep Carnival floating in the water, waiting for customers to come back, which will not be coming back for about 9 months to 12 more months. Carnival will absolutely burn off $7 billion more before they bring money in. The stock is way too high. But hey, if the stock wants to trade at 25, 26 bucks, I say keep selling stock from your treasury to the people who want to give it to you. I mean, it's a gift. Take the money and keep waiting it out. That's what you're going to have to do. GameStop 43.05, popped over 43 again. Still down though, 2.95 on the day, roughly $3. Tesla 669, down $44. It's actually at its higher level of the day. The highest was 678, but it's now at 669. It was as low as 619. So this stock, Tesla, has recovered $50 from its low trade of the day. That's a good flip for a day for day traders. Tons of flips have happened there. 26 million shares have traded. Think about the amount of money that's trading hands with Tesla. You have 26 million shares at $650 a piece. That is some serious money changing hands right there. Brokerage firms love the action. They're bookies. They're in the middle of the trade. They're in the middle of your trade. They're just give us your orders. We just want to make money on the transactions. Gore Holdings now 19.18 down 277. That's approaching its high of the day. 1970 it reached already today. As low as 15.81. That is a $10 plus drop in 2 days since Josh Brown, 2 trading days since Josh Brown said he bought into this thing. That is a serious sell-off. There was some serious speculation going on, and those guys got out. They got blown out, and they're moving on for now. This is an opportunity here, and had been at 15.81, $16, $17. That is a gift all wrapped up with a bow on it. Please take this stock off my hands and make yourself a bunch of money. And anyone picking up Gore at these prices, I think you're going to do just fine. fascinating to watch how these shares are reacting on the open market. Back to the big board right now. The Dow down 189, S&P down 38, and NASDAQ down 315 on the day. Alrighty, looks like the big wave has ended for now, but we'll see if there's another one or not. Baron, do you think IBM is a better medium to long-term play than AMD? Two different kinds of companies. One produces chips. The other one is in the software cloud business. So you can't compare businesses. Stock now, okay. AMD has, they've got a wonderful problem. Every chip they make pre-sold at full price. So they've got a good couple of years in front of them. IBM, they got a good thing going too. They're into the cloud computing area big time, expanding big time. Dominant, they'll be a big player in this area. They've got a high yield. They're a much more mature, older company, solid financials. So, both will be a good move. But if you only have enough money to buy one or the other, you're going to have to figure it out for yourself. Are you younger? If you're younger, you might want to be into AMD. If you're older and you want the income as a guarantee and then some capital growth, maybe IBM for you. Depends on your risk tolerance as well. IBM is a lot less risky, what I'm saying there. All right, let's go here. Wow, AMC is volatile. No kidding. Up 40 cents now to $6.95. AMC's jumping around. Let's see. Who doesn't love a company impervious to almost anything that offers a dividend? There's IBM for you. That is definitely a reason why I'm recommending it. For a percentage of your portfolio, I would definitely look at it. What makes a company list on NASDAQ instead of New York? And what would make someone list on New York versus NASDAQ? I think that NASDAQ, first of all, has always been a computerized type marketplace. NASDAQ has never actually had a trading floor where you got the guys yelling and screaming. New York was, it's the old guy, the big market, always on the floor yelling up until the 70s and the 80s. They began to add computer trading into the mix. New York now is probably 80% computerized, 20% floor trading. Once we open up the economies and people can be mingling again, there'll be a bunch of floor traders and specialists on the New York floor. Certain companies and certain traders really would rather be involved in the New York Stock Exchange because of the human outcry, trading value systems, specialists that are human beings on a central floor. IPOs are very evident when they go public. IPOs come out. You'll see Bob Pisani in a certain trading area on the New York Stock Exchange. He'll talk to the specialist who's handling the pre-opening of the stock, and he's lining up the buyers and sellers, and he can just tell. They can just tell by hand signals what each guy wants, doesn't want, male and female, and so on. There's a lot more feel to the market that way. I prefer the New York exchange to an automated exchange. That's this. I'm an old school guy though. The new world and the new way of trading, it's all on your phone and computer and very little human interaction. But I do like the human supervision factor on top of these markets. But that's just me. Each company has its reasons why they want to be on one exchange versus another. And some, are just happy to go public no matter what. Each exchange does offer certain advantages. Now, NASDAQ is more towards high-tech listings. NASDAQ used to be known as the place you go if you were into e-trading, e-commerce, online anything, you go NASDAQ. If you were more services, more industrial, more manufacturing, import-export, you would go New York. Banking, New York, computers, NASDAQ. But those lines are blurring up as time goes by, and so there you have it. The greatest trade I ever made was changing out from being a single guy in 1976 and hitching up with a gal named Jennifer and becoming a partnership. That was the best trade I ever made, and I ain't going back. There you go. Let's see here. What do we have? Can Gore's hit 15 again? I want more money. I don't know. It's 1942. You may have had your chance. That might have been it. These issues, they have their moves. They have their ups and their downs, and you got to take advantage of it when it's handed to you. And half an hour ago, you had your shot. It's the way it is. What else is going on here? OCGN had good news about one of their drugs. Let's see. I keep seeing flat in discussions. What does that mean? I keep seeing flat in discussions. What does that mean? Depends on who you're asking and who you're talking to. Some traders will say, I'm going to be, I own, the basket of stocks, and they'll be asked, "What are you doing today?" And they're saying, "I'm flat. I'm not doing anything today. I'm just sitting on what I got. I'm not moving. There's no reason to get in. There's no reason to get out. I'm just flat at the moment." But that can change in a minute's notice. You never know. Let's go. What else is happening here? The volume on Tesla is going crazy. Someone's saying, Samuel, well, like I said, Tesla has been very volatile today. The last couple of days, it's now down only $31 a share. Sounds like a lot, but this thing was down a lot more. It's now $285 or $685. It was down to $619. So that's $65 a share bounce back from its low of the day. There's a lot of people making a lot of money on this stock if they bought this morning. Someone sold it at $619.50 today. Someone sold it at $619.50, and they're kicking themselves because it's $684 within an hour. Oops, maybe it isn't going to 500 a share. How about that? Let's go. Bruce, David wants to know, is there some common behavior seen for SPACs right after the merger? Does it normally dip or go higher? Any common behaviors? Not really. I think as we go forward with SPACs, it becomes a much more common thing. More people understand them. Hopefully there'll be some respect given to SPACs. There might be a bit of a pattern where the listing is done, depending on who listed it and who backed it. There might be a bit of a run on it, but then there'll be kind of a quiet period until the company announces a merger. There might be a run right away or not, like we're seeing here on some of these stocks. But each one is its own unique animal, and everyone has to decide at the time whether they want to be involved with it or not. Anyway, what can I say? Sin says, I'm only down 15% on the day. Of course, that was a while ago. You might be up 15% by now. Eric is saying AMC volume is crazy. What is that ETF semiconductor called again, please? Vector. It's called a Vector. Where am I here? ETF. Vector Semi. SMH is a symbol. Just look it up. SMH. Look it up. Oh my gosh. SMH. Thank you, Vince, for that. Brandon, I got in on an SVAC thanks to your heads up at 1025. Well done. SVA. Where are we at right now? There we go. 1044, up a little bit. Way to go. There's a lot of upside there, I think. Is this a market crash or a correction? This isn't a crash. A 200-point drop in the Dow. That's a hiccup. That's an anomaly. It's down 136 now. NASDAQ down 230 instead of 530. Yeah, we got money coming in here. Let's see what else is going on here. Comments. I see your comments. Shopping spree time. It was. I keep reminding myself we're only 30 minutes into the day. That's right. This day ain't over. I've made more money today than the last month. All my favorite stocks are on clearance or are on sale. I love it. Let's go here. What else have we got going on here? Big tech sell-off. Maybe was, not now. Maybe it's a big buy-in right now on tech. Let's go here. Hold me. Hey, GHVI might hit 20 before the first hour. It went down to 15 odd. Now it's back to 1920. What a bounce back. My girlfriend's boyfriend's going to be mad. I lost all his money. Do you think the market bubble is about to burst with all the world government's quantitative easing and how long and QE will take? No, I don't think so. No, not going to burst at all. No. Fully funded, drowning in cash globally. No crash coming. No. Sluggish economic growth maybe. Yeah, but crash, I don't think so. Let's see here. I've missed so many of your comments. So I'm so far behind your comments that I have my computer just skipped over a bunch of them. So I'm just going to come through here and catch up with you guys. SMH is prime stock. Thanks for the answer, Bruce. You're welcome, Dave. My portfolio is getting shredded. Guess I shouldn't look too much and just hope for long term.
Let's see here. Stock markets with Bruce. To make this, it's easier to remember the semiconductor ETF SMH. Shaking my head. There you go. Wow. Jake is saying, Bruce, Al Toro, the online brokerage, I think in Europe, still having some markets closed an hour into trading. Any thoughts on this? I have no idea. I don't know what their problems are. I don't know them. I don't know how they operate. I can't comment on it. Khalib, what are your feelings about VGAC? I like it. 1138. I really like it. That's a good buy here. VGAC 1110 for the low, sitting at 1138. This is still near the low of the day. This is a buy. I like this. Let's see. This day ain't over yet. Bruce, can you comment on the super low borrow rate for GameStop shares despite the seemingly minuscule supply? I have no idea. Speed 23,500. No idea why, how, what, where, and when. I would love to have seen the clearinghouse in front of Congress last week, but for some reason they weren't called to testify. Isn't that something? No one was called to testify. Kind of weird. Bruce, can I stay with you and your girlfriend in Creston? Which one? I've got so many girlfriends in Creston. Jen doesn't know anything about all of them. Of course, she has no idea. How is it that you're on the air 5 hours a day? How can you spend so much time with these girlfriends? It's maybe they're pretend girlfriends. Maybe that's what it is. I don't know. I'll see what's going on. What else? Volplo. I got into SVAC and VGAC. Thank you. How long should I sit on it to see some results until the results come your way? Just sit there and be patient. I know folks love watching me for a 1 hour trade. That's what they're looking for. Bruce, can you tell me how can I double my money in an hour? I had no idea that GHVI would be as low as $15 odd, and an hour later it'd be $19.32. No idea that was going to happen, but I'm glad it gave some of you a shot. I just don't know how many you took advantage of it. That's a good way to average down on this stuff. Way to go. What else have we got? Thanks. I checked the companies and they look good. By the way, also feeling good about GHVI. Waiting for another dip to get in. Let's go. Talks the pregnant. Are these blow up girlfriends, Bruce, that you have? Are they blow up girlfriends? Let's see. CCIV is climbing. Zextra is pronounced Sixtera. Thank you. Someone finally telling me how to pronounce this thing. It's called Sixtera. Cyxtera. I wish these people would just be called Smith Company or something like that. Make it easy. I mean, geez. I don't know what they're doing. Uncle Bruce, can you explain where the term street form came from? As in, please put my shares in street form. Well, it used to be that you could get share certificates in your name, registered in your name if you were the owner. But there also were share certificates issued just in street form. They were not registered to any one person at all. And this would be like trading a $10 bill from someone else to someone else. And that's how stock used to trade between brokerage firms when I was in the business. At the end of the day, we would count up all our buys and sells, and the next morning we would be settling up trades from a week ago because it took 5 business days to settle up a trade back then, whether you were a buyer or a seller. And so at the end of the week, when the week came, we had to deliver stock certificates to the brokerage firms we owed stock certificates to, and we had to pick up stock certificates from the brokerage firms that owed us stock. We always used couriers to do all this. And the shares trading hands were in street form. So the broker that we sold stock to would accept shares in street form. The courier or a rep from our office would show up at the other brokerage house with a bunch of certificates, and the person behind the counter and our rep on the other side of the counter would go through each stock certificate and say, okay, we owe you 20,000 shares of this. Here's 5, 10, 15, here's 20,000 of that. Okay, good. Sign here, sign here. Okay, we owe you 7,000 shares of this. And here they are right here, 1,000, 2,000, 3,000, whatever denominations these were. Street certificates. They were like dollar bills. And we would do these transactions between each other, sign off each way, and then we would part company. The broker that got the stock certificate would now put them in their vault or take them to their bank at the end of the day. The next morning, all the certificates would have been brought back from the bank's vaults to settle up the trading day from a week ago. It was happening every day, 5 days a week. And it was paper in street form. That's how we used to do it. Now, we would have sometimes a certificate, a street form certificate of a company. We'd have 20,000 shares, one cert, but we only sold 1,000 shares yesterday. And a week from now, we have to deliver 1,000 shares of that company to this broker over here. Well, we don't have 1,000 share certificate. We have a 20,000 share certificate. So we would take the certificate, go to the transfer agent where they had blank certificates on behalf of the public company. We would take in the 20,000 share street form certificate, and they would produce for us whatever we wanted back. What do you want? We say, well, give us a 19,000 and a 1,000. There's our 20,000 shares. Now we would take those two certificates back to our brokerage firm. The 19,000 certificate would be deposited in our bank account that night in our safety deposit account. And the 1,000 certificate would be delivered tomorrow morning or a week from now, whenever settlement was, to the buyer of that certificate that we had to deliver it to. But sometimes what would happen is we would have a customer sell 1,000 shares of this stock, but we wouldn't be able to sell 1,000 shares to one buyer. We would sell 1,000 shares to 5 buyers. Each one bought 200 shares for 1,000. Now we had a 20,000 share certificate. We needed to break it down into 5 200s and a 19,000. So we would go to the transfer agent and say, break this certificate down to 5 200s and give us an 18,000. And we would take all those back to the office and we would deliver the 5. Each 200 share certificate would be delivered to this house, this house, this house, this house, and those certificates would then go into those brokerage firms' accounts. We would have our 18,000 certificate back in the bank. That's how this used to be done. Paper. And public companies would get the phone call from the transfer agent and they would say, you know, in the last week, we've printed off 50 different certificates for you guys to break down all these certs into smaller amounts. How many more blanks should we print up? And I would say print up 500 more blanks, because somebody walking in the door with a 10,000 share certificate might want to say, give me 2,500s for the 10,000. I want 2,500 certificates so that I don't keep coming back here and breaking this thing down all the time. And then we'll see how it goes from there. But we would have certificates broken down into 50s, 25s, all kinds of stupid numbers. And so when we would go to the bank and we know we need 2,500 shares of this company to settle up tomorrow morning, we would send our cage people to the bank and they would look at our certificates and they would go, okay, we own 50,000 shares of this stuff, but we need 2,500 to deliver tomorrow to this place. They would look for, oh, there's a 2,500. We'll take this one. They're all street form. We'll take that and we'll deliver that one. But if we don't have a 2,500, we might have a 1,500, a 500, and another 500, or we have a 1,000, a 500, a 250, a 250. We cobblestone together 2,500 certificates, shares, to deliver in street form to the other broker. This is what it used to be like when I was a branch manager and trader and broker back in the 70s and the 80s. It was laborious as hell. And when we had a client say, I want to buy 500 shares at $4, I wouldn't think about the fact that, oh God, 500, he wants to buy 500 shares. The seller is going to deliver to us a 500 share certificate or 5 100s or one, whatever it was, 2 250s. That the broker didn't think about, the customer didn't think about, but the cage thought about it. And when we were busy and we would do 500 trades in one day, 200 buys, 300 sells, the cage knew, oh, we're going to be bringing in a bunch of certificates. We're going to be shipping out a bunch of certificates. And I'd have 8 people back there handling all this stuff and keeping on top of the numbers, and don't misplace any of this stuff. Oh, and don't spill a cup of coffee on those certificates. Thankfully, they were as tough as $10 bills, $20 bills. You could scrunch them and not break them, but we were always babying these certs because these certs would change hands all the time between brokerage firms like crazy. So that's the way it used to be. Street form, that's what street form is. Doesn't exist anymore. It really doesn't exist. It's all electronic now. And the cages of every brokerage firm are going, oh, thank God. It's just a keystroke on the computer now. That's all we're doing. We don't have to handle these certificates anymore. And God help you if you lost it. Oh my gosh, where's that pouch with all those certificates in it? That pouch, where'd you put it? It could have $250,000 in stock in there. That's when we started hiring retired police officers as our personal couriers to just go a block. From our brokerage firm to that one, we would have retired police officers that would be allowed to carry weaponry. And then at the end of the day, we would have the Brinks guys show up. The Brinks guards would come into the house, and we would give them all the certificates that we acquire today and that we were dealing with. We might hand them $5 million of stock from our branch in Calgary to take to the bank to deposit. And then the next morning, they would bring it all back and bring $5 million in stock back to our house, into our cage, which would be a locked room at the back of the house. And we'd have an alarm system there, and no one could just waltz on in there. Yeah, security was serious stuff. Oh, we're glad those days are over. We don't have that anymore. That problem isn't there anymore. There you go. Oh my gosh, what's going on here, Bruce? Gamestop. Good morning, Uncle Bruce. In Gamestop level 2 data, why do some ask prices show up higher? Example 500 plus 42,960 and disappear, and these orders actually getting filled? Can't answer that question. I don't have level 2, so I can't. I'm not seeing what you're seeing. Obviously, I'm not 100% sure if that's accurate or not. I have no idea. Samuel, Bruce, support your channel and all your content. Thank you, Samuel, for doing that. All of you who are here, thank you for supporting this channel, following my my exploits here. Hope you're enjoying the coverage as we try to make everything understandable in plain English. I was always wondering, what were they stealing in Die Hard? They were stealing the certificates, the street form certificates of U.S. Treasury notes. Exactly. There were no names on it. They were just certificates like bills. You could take those certificates into a bank in Zurich and say, I would like to deposit this into my account. I would like to take this to, I want to take this to a brokerage firm in Vienna, Austria. And you drop off street form certificates with your broker and say, I would like to deposit this into my account. And then a week later, you call your broker and say, I'd like to sell half of those treasuries to just for cash. And the broker is happy to do it through the bond desk. They sell it off. Now you've got cash sitting. What do you want me to do now? I'd like you to wire $1 million to my Swiss bank account, blah, blah, blah. All handled, fees involved in all transactions. But these guys were looking to steal these bonds because every year these bonds paid interest. And the movie was made in 1982, 83, when interest rates were much higher. And Hans Gruber was looking to have bags and bags, gym bags full of these bonds. I don't know how many hundreds of millions they were getting their hands on to live off of for a long, long time. Untraceable to individuals because they had their hands on it. What they were going to have done is they would have taken those bonds to wherever they were going, and they would be liquidating them within days all over the planet, and that would be almost impossible to trace it backwards to them. That was the plan anyway. It was a movie. Let's keep that in mind. Any comments on PLTR? They made a deal with IBM. They're partnering with them. They are a growing concern. But I don't know the financials, and I don't know their upside. I don't know. But I have heard positive things, but the shares have been higher than where they are now. That's all I know about PLTR at this point. Don't they call them bearer bonds? I think they may have called them bearer bonds. Yeah, to the bearer is the bond. Whoever's bearing the bond owns the bond. Like I said, it's like a dollar bill. You walk into a 7-Eleven, hand the individual a dollar bill. The person isn't asking you, where did you get this from? Who gave it to you? Who owned it before you owned it? None of that nonsense. It's a dollar bill. It's a bearer note. It's a bearer bond. Yeah. Let's see. What else is going on here? Let's go through here. Die Hard. I love that movie. 1988. 1988. Okay. Like I say, that's when my daughter was born. That's a long time ago, wasn't it? Wasn't that, think about that. 33 years ago. Oh my gosh. Hans Gruber. I love that. That was Bruce Willis's last good movie until The Fifth Element. Fantastic. GHVI, nearly $20. 1986. You could have had it at $15.81, you guys. Did you buy it? Anybody buy it when I talked about that? Oh my goodness. Cami, thank you for this donation. Hi, Bruce. What's your thought on HIVE blockchain? I have no idea what that is. I don't know. Don't know what that means. I need more help. Bruce, is your surname Willis? You see this hair right here? I can't be Bruce Willis. Got way too much hair on my head. Your daughter is a year older than me. I love older women, says Stonks Doctor. My birthday, May 18th, 1988. Joe, Stonks Doctor, laughing my ass off. Bruce, is your surname Willis? Oh my gosh. Epic Tea Time with Alan Rickman. Epic Tea Time with Alan Rickman. Let's see. I placed an order for GVH and it jumped so fast. Bruce, I bought it at $16. Well done, everybody. You pick up your SVAC right here at 1034. Pick up your Fortress at 1042. Pick up a VGAC now at 1170. Pick this up. If you're looking to get into these SPACs for these mergers that I talk about, get them now. GHVI 1991, under 20 is a buy, but under 15 or under 17 is a steal, and it was there for a little while, but not too long. Will it come back again later today? I don't know. The Dow is now only down 75, down 72 right now. NASDAQ only down 175. These were down 2 and 300, 3 and 500 respectively. The markets are definitely coming on right now. They're definitely been coming on here. We'll see how much more they recover. We'll see what's going on. U.S. consumer confidence climbs to a 3-month high. That's a bulletin that might be helping the markets. U.S. home prices registered their largest monthly increase since 2014. That is a sign also of the economy and how people are buying into the stay-at-home economy long term. There are a lot of folks out there who have found the magic formula for the success going forward. They are not going to be working in an office ever again. They're only going to be consultants, self-employed consultants from home, and corporate America is buying in. The corporate planet is buying in. I see in the next year common stories where you're going to hear stuff like someone down the street from you or just over here from you is working for a company from a different country, and they're working inside their house. They're not even working for a company based in where you live, not in your town, not in your state, not in your country, overseas. That is how far this is going to go. The at-home economy is really gone digital, and it's really gone out there. And I also see people's vacation plans now have completely been upended, where someone like yours truly, I will be in the wintertime here in Creston talking to you. And in the summertime, excuse me. In the summertime, I will be here talking to you in Creston. And in the wintertime, you're going to be watching me, and I'm going to be in Palm Desert, California. That will be my plan going forward. Just as soon as we can start traveling, I'll be down south in the winters there, enjoying the warmer weather, and up here enjoying the warmer weather and saying goodbye to winter if at all possible. You won't notice a difference except for the backdrop and maybe the tan. And the smile on my face. Robin, Bruce, thanks for the shows. Watch you every morning. I got GHVI at under 18. Way to go. Turn my portfolio green with your guidance. Way to go. Absolutely beautiful. GHVI, FAII, SVAC, and VGAC. These are definitely 4 you want to have. And I think you're going to see even better days. All right. Can you travel now, Bruce? I believe in you. Theoretically, I could fly to Palm Desert if I had a COVID test and all that kind of stuff, and I could be there. But if I come back here, I got to go through this negative testing, 2-week quarantine crap, and Jennifer will have none of that whatsoever. So we're going to have to get through get through this whole thing first. I have a friend in Spain, says Voplo, is working for a Canadian company full-time from home. It's already a reality. There you go. This is going to become very common, very common. You're going to see people in RVs full-time, and I'm not talking about used $5,000 wrecks sitting on a street corner. I'm talking about you're going to see people in $250,000 to $500,000 luxury RVs working and traveling full-time, and they're gainfully employed, making $200,000 a year, but not living in a house, living on the road for 5 years, traveling Mexico, Canada, the US. Once we open up again, they will be inside their luxury unit, traveling with their significant other, maybe with pets, perhaps kids, perhaps not, and homeschooling perhaps as well, online schooling perhaps, yes. And these folks will be consulting online, either on the camera or literally just typing with their fingers or making phone calls. This is going to be a new normal that you're going to witness. And we're not talking about people who are displaced from their house. No. They didn't get involuntarily kicked out of their homes. They voluntarily dumped everything. They wanted out. They got out. And they're mobile, and they're making more money than they've made before because they get to keep more money. They don't have mortgage payments. They don't have property taxes. They don't have monthly utility costs. They don't have 3 cars. They have their unit and a car they're towing maybe, or a car they rent from time to time. People are going to change their lives because of what's happened in the last year. Absolutely change lives. I think it's for the better. I think it's fantastic. Amanda, Bruce, you missed my super chat about cruise stocks. What was the question? Give me your question. I'll try to get to it. I'm sorry if I missed it. These comments do come through here. Jay, Palm Desert, woohoo, Sonny Bono Memorial Highway. Yeah, people forget that Sonny Bono was the mayor of Palm Springs, and then he became a congressman for the region in California, in Washington. He was doing all right. He was pretty smart, that guy. He was no dummy. Let's see. Chris worked from our boat for a while. There were lots of folks doing RV, boat, etc., living and working already. They have been for years. That's true. And this is going to become even more common with even higher executive types, is what I'm trying to get at. There were a lot of folks in 08, 09 who were forced out of homes. They lost everything. They ended up in an RV or whatever they're doing. But in the last year, a lot of people are realizing, hey, I don't need to go to that office anymore. I can be a full-time employee from my house. We could sell our condo in Manhattan and get a house in Connecticut and live there. We can sell our home in San Francisco for $2 million, buy a place in Denver for $700,000, double the size, or we have a getaway, a summer getaway place, or a winter getaway place. We used to live in Chicago, work full time in Chicago, but we had a winter getaway place in Arizona or in Palm Desert. Well, why don't we go down there, buy a house down there, bigger rather than just a getaway place, sell the place in Chicago, and just live there and work for the company in Chicago from down there. And we're in the desert all year round, or we spend the winters in the desert working. Now we thought someday we would be able to live in the desert for the winter for when we retired. Well, now we'd have to wait till we're retired at all. We can do it right now. We can literally downsize in Chicago from something we own to something we rent, like a nice apartment. Take the cash and either rent something for 6 months at a time, or take a 1-year rental in the desert, permanently rent from an apartment building there, and permanently rent in an apartment in Chicago, commute between the two with our car at our leisure if we want to, and work wherever we are. And you know what? For 4 or 5 months of the year, we're going to be down south. And while we're not down south, we're back in Chicago. We can say to the kids, hang out at the condo in the apartment we've got in Tempe, Arizona, or in Scottsdale, or in Palm Desert, or Rancho Mirage, or wherever we are down there. Or we have friends or relatives coming in. meet you in Palm Desert. We'll hang out with you for a couple of days, and then we're going to take off and leave you alone in the condo for a week or two. Enjoy it. And we're off to Vegas, or we're off to Chicago again, or we're off to Frisco, or whatever we're doing. The world has gone mobile, and it's going to be big time mobile going forward. I really see changes. Living in a van down by a river is possible all of a sudden. Is it responsible? We'll see what's happening. The day trading fund is done for me today. Everything is stabilizing. There you go. I've got GameStop at 43.57 down 243. I've got Gore Holdings at 19.99 a share now, only down a penny. And I've got Virgin Group now at 11.76. It's come up from 11.15. Also coming back up. So there you go. More importantly, for many workers, the companies have been forced to trust their workers to work away from an office. Without taxes, wouldn't taxes be an issue if you live that much in another country and work? It all depends how much you make. Look, if you're a millionaire, you got tax problems. But then if you have a tax problem, you have a tax specialist to solve tax problems. If you're a middle-of-the-road worker, and you can now, you can make $60,000 a year where you are, in the office or at your home, or you can make $60,000 a year selling the home you have where you have it and moving to someplace else where you want to be at a cheaper price. Again, it's where you want to be. You've just downsized your expenses, upsized the quality of life. You're still making $60,000 a year, but you might be spending $5,000 a year to live where you're living. Well, you're $5,000 ahead after tax, no matter what the deal is. Now, what's the tax rate where you're going to? You might be shocked that leaving Connecticut, high tax jurisdiction, and moving to Texas or moving to California or moving to Arizona, maybe Arizona or Nevada, maybe, might be much lower from a tax point of view that you hadn't thought of. And you're realizing, oh my God, after tax, I'm $6,000 richer. Just after tax. But on top of that, the cost of living is lower because what I was living in here cost this much. And what I want to live in here might be more house, but it costs this much. It costs less to get more, and I'm getting more net from what I used to get. You're a double whammy winner. Lower taxes and lower cost of living. Away you go. It all depends on the country, the state, the county, where you are, where you're going, where you want to be. This is what you have to investigate. I think it's kind of fun to look at this kind of possibility because you can now kind of think about that and go, this might be an idea. Nicholas says he's long Palantir, VGAC, SVAC. Let's go. How can I sue Uncle Bruce? Everybody wants to sue Uncle Bruce. Went long Tesla at 653 earlier today. I'm up 50 cents a share right now, or am I up $50 a share? It might be $50 a share. Tesla 704. You're up $50 a share. 704 on Tesla. That is up from 619 this morning. Do you think the sellout might be over? There might be a little recovery happening. Very interesting. Sin, they've already started running into tax issues, BC, because if you live in a state with no income tax but work for a tech company in San Francisco, there might be some issues. It all depends on the relationship you have with the employer. You might work a deal that says, hey, look, employer, I used to live in San Francisco. I used to work for you all the time. I love working with you guys, but I can't be an employee for you anymore. I can only be a consulting practice now. I now live in Nevada, or I now live in Wyoming, or I live in wherever I live. And I've set up a consulting practice for the kind of work I used to do for you as an employee. I now offer it as a corporation. And so I've incorporated in this state, and this company will make a deal with your company through your human relations department, and you can just pay me a flat fee per month that I will now bill you. And again, you have got to talk to a tax professional in the state you're going to before you do the move to be sure that if you set it up the way you're wanting to set it up, it works. And can you make a deal with your current employer to work with you going forward under these terms and conditions? If the employer says, no, I want you to come into my office and I want you to commute an hour each way every day and I want to treat you like crap, and you're willing to take it, well, then that's the world you're in. But if you're not willing to take it, you might start looking around. And the game plan here is, I've been working from home doing this work. I can do this work for any company, anywhere, I want to live here to do what I do now, but from this location. Well, maybe it's time to start scoping a local business there that might hire you from home, or you scope local businesses where you are to offer your services to them remotely from where you're going to be. Do internet searches. I can see LinkedIn lighting up going forward, where they will specialize. There will be people specializing in finding you the kind of work you can do from home wherever you want to be home. And companies be damned. There's a big change coming. Interesting. Here we go. Andre, companies are more than happy to pay you as a company rather than a salary because it's easier for them to cancel these contracts rather than fire you. That is correct. They might not have to offer the benefits either. That's correct. But you as a company can say to the other company, this is what I charge. I charge $5,000 a month for my services. I charge $10,000 a month for my services. You might offer them work that takes 2 people to do. You hire a second person remotely to help you with the contract you just signed. You're now dealing with a company in a whole different light. You're not dealing with one person me to company you. You're now talking about corporation me to corporation you. And I know you need these services. You hire 10 people to run this department in your company. They're all working from home right now. Some are doing well with it, some are not. You might be a supervisor of 10 of these people. You're a manager. Now you're thinking, you know what? I can be a manager for this company, but I've got these friends of mine, these coworkers who are all stuck at home. You know what I could do? I could contact them individually, privately, and hire them myself. They could work for me. And I can now go back to either that company or go to other companies and say, I can offer you a 10-person team that can handle your accounting needs or your marketing needs or whatever it is you're doing. And you can now offer services globally through a corporation that you're setting up wherever you want to be set up physically. And these folks, they don't have to move with you. They can stay right where they are. They're at home. And they work for you remotely because you're offering them a contract arrangement between your company and themselves. And you're telling them, incorporate your own little company, and my company will hire your company, and you'll make more money at home than you're working for these guys over here. Because you got all these deductions now. As a corporation, you have deductions. Rent, internet, telephone, office supplies, the car if you need to drive for office, for whatever needs. There's all kinds of deductions you have here that you don't have as an individual. And all of a sudden, all these people become incorporated, dealing with other corporations that are now dealing with corporations, and your employer is out to lunch. They really want to have 10 slaves in that office. They're going to have to hire a new slate of new slaves. In the meantime, you and your gang are going after contracts for companies that are looking to deal with looking for corporate services that you can offer remotely, because they don't have the office space. They don't want to have you in the office. They want to deal with people remotely because they want to keep their office rent down and their overheads lower. And they find that working with contractors through corporate entities is a more efficient way to go for them. No employee benefits, no sick leave, no holiday pay issues, no feuds between employees, no managers, fewer people in the human resources department. Yeah, that can work for companies and can work for you. Anyway, just throwing it out there. Lots of thoughts, lots of things to wonder about. We're not going to take it anymore. We're not going to take it. Hey! Hit the like button. It keeps Bruce going. Thank you, everybody, for hitting the like button. We now have 814 likes. We have got 1,223 people here. We're only 180 odd away or so from 1,000 thumbs ups. Come on, you guys. Give me a thumbs up right now. Let's get over 1,000 thumbs ups right now. Been on the air for 2 hours plus, and you should be giving me 1,000 thumbs ups. Isn't that fair? I mean, I'm doing the talking, you're doing the listening. Give me a thumbs up, you guys. Hit that darn thing. Let's go. 878. We're going to hit 900 in just a second. Let's get to 1,000. Make it happen. 897, baby. We're almost at 900. Do it. 937. We're going for 1,000 now. Come on, you guys. Hit the thumbs up. Give Uncle Bruce that love he deserves. 972. We're almost there, you guys. You're unbelievable. Hit it hard. Hard. We got curling going on right now in Canada. The women are curling on TV. Jen is watching curling all the time. The women are yelling all the time. Hurry, hurry, hard, hard. There's 1,000 subscribers, thumbs ups. Thank you for that, you guys. You're incredible. I love it, and I really appreciate it. The YouTube computers, the analytics are going, what's going on? 150, 60 thumbs ups in 3 minutes. What's this guy doing? What's going on over there? Well, you're letting them know. Send viewers over there to that channel because the greatest viewers of YouTube are watching and they want more joiners. Thank you, everybody. Raman Bruce, thanks for the shows. Watch you every morning. I got GHVI under 18 today. Turned my portfolio green with your guidance. I'm happy with that comment. I think I read that one already. Let's move on. More donations have come in here. I don't want to miss those. Thank you, everybody who's making donations. Definitely want to highlight those if I can find them. Where is that donation? Here's one right here. Thank you, Mad Cow, for this $9.99 donation. No more paper. How isn't there counterfeit shares if there are so many fails to deliver in the stock or ETF? How can you explain 100% institutional ownership of the same particular stock? Very good questions. I don't know. That's why the Congress should have hauled in the clearing corporations in front of Congress last week. That's who you want to talk to. That's who you want to question about what the heck is really going on out there. That's exactly what your question right there is, what everyone should have an answer to. The guy at Robinhood couldn't answer that. He doesn't know what he's talking about in that area. It's not a specialty. He knows nada. But yes, that is the kind of information we should be being given and been told about, but we're not getting it right now. Thank you, Nerculia. Hey, Bruce, why did you recommend Home Depot? Because they're making money, unbelievable money. They increased their dividend by 10% today. Have you had a 10% raise from your boss in the last year? I don't think so. Home Depot just gave everybody a raise that is a shareholder, 10% dividend increase. The company is making money hand over fist. It is a deal. I think it should be picked up. I noticed this morning, let me see here, it was as low as 257.58 this morning. It's now back to 266. It's still down 9.50 on the day. That is a buy for the long-term hold. Solid buy. Buy Home Depot. Buy IBM. That's another solid buy. You can put your money in there and sleep at night. You'll do very, very well. I like it when you beg for likes. Thumbs up for Bruce. Thank you for these thumbs ups. Market went down and Bruce made us buy. Give him the thumbs ups. That's right. Help out Uncle Bruce. Thank you for these donations that you're making. I hope you're making money today. I'm trying to help you make money in the markets. You buy low and you sell high. Did you buy Tesla at the low? Did you get Home Depot? Did you get GHVI today? Have you picked up Gamestop around $40 a share? All of these shares have rebounded nicely today, and they're not even back to where they were. You'd already be up money. The Dow is down 86 now, or 56 now, excuse me, down 56 points. The Dow has really turned it around. S&P only down 13. NASDAQ's only down 150. It was down over 500 points. Buy time is what we call that. We have got a real recovery going on here, and I love it. What else is going on here? Call him out, Bruce, says Danskin. We got 1,000 thumbs ups. Fed, thoughts on the Fed announcement. What announcement did they make? Did they make anything? Fed is committed to easy money until recovery is much further along. That's good for the market. That is good for the economy. That is good for all, not just America. That's good for everybody. That is telling me this market is going a lot higher. These markets are going higher, but you got to pick your spots. You got to pick your spots. Don't buy the shares overvalued. Buy the shares undervalued. That's where I'm going right now. CCIV, how is that thing doing? Let's see here. CCIV. Let's take a look at Churchill. Is there any hope for Churchill investors? It got as low as $30 this morning. Now 41.80, still off 15 from yesterday's high. This is so overvalued. But you know what? Look, here's a classic case of a SPAC merging with a company. Look at what happened to this stock. anyone buying this stuff at 10, 15, 20, 25, you're still up on this thing. It's been overpriced the whole time it's been trading, and yet here's a reflection of what the market thinks of a SPAC once a merger has been announced. I'm telling you about SPACs like Starboard and Fortress and Gore Holdings and VG Acquisition. These are SPACs that have got a long road ahead of them of upside, and you can buy in at much cheaper prices. The risk factor of buying VGAC at 1168 or Fortress at 1044 or Starboard at 1042, your risk factor here is very, very slight, very slight. The upside is phenomenal. And so there you have it. If Churchill is worth 41.80, these are definitely undervalued over here between 10 and 19 a piece. These are super on sale, but you got to get in early. You got to get in before the street figures it out. And for the three of them, Virgin, Fortress, and Starboard, they are definitely unknown compared to Gore's, which has already popped to 27. It's back to 1959. Under 20 bucks, it's a buy. But Churchill is just an indication of what could happen to these stocks once the street figures out just how juicy these things are. That's just what I'm saying. That's just me talking. Maybe I'm blowing hot air, but I don't think so. I think there's some potential here. We'll have to see what happens. Those of you out there, by the way, who would like to spend an hour with yours truly privately, it is available. You can rent me for an hour if you like. I will be happy to set up a one-on-one session with you to go over your portfolio with you, to figure out where you are in your world, what's happening in your life. If you want a 65-year-old perspective on where you're at and all my experience in trading, I'd be more than happy to set up a 1-hour private consultation. You need to contact me on my private email and we'll set up an appointment together. There's my email right there. Be more than happy to talk to you about your situation. I know some of you are now shifting forward. You realize that you might be looking after your parents or in-laws. You might be looking after a relative going forward and their investment needs and what you need to do. You're no longer a 22-year-old kid anymore. You're now in middle age and it's all changing. You're becoming empty nesters, or you're going to be empty nesters. If you want to talk about that, you can certainly talk to me privately about all this. There's my address there. I do charge $400 US an hour for my time, but I have a feeling that after about 30 minutes of hanging out with yours truly, you're going to go, oh, I got thousands of dollars of ideas here. Thank you, Bruce. Let me know if you would like to do a session. I will arrange it. Saturdays and Sundays are the best days for me because I'm not on the air 5 hours a day, although I can occasionally do a Tuesday, Wednesday, Thursday, or Friday evening session. I'm already booked tonight, so I can't do anything for anyone tonight. But if you do want to do a get together with me, let me know with a private email, and we'll see what we can do for you. All righty, there you go. Thank you, everybody, for all of you following me, and those of you who've already engaged my services. Thank you very much. Did you recommend to Home Depot? I did already. Let's move on. Comments that I'm catching up on. Shadow Fox, thoughts on CCIV. I'm not a fan at these prices. I'm not a buyer. The story is come and gone. The deal is done. I'm not going to recommend the stock now for a 2-year hold going forward. No way. They've got a lot of work to do. They got to get that deal done, and then this company going forward has a long way to go. And so the easy money has been made. How about that? The easy money has been made. There's easy money to be made right now on 4 SPACs that I'm recommending. That's Starboard, Fortress, Gore Holdings, and VG Acquisitions. There's easy money available for you on any of those 4 or all 4. Okay. Mad Cow, okay, what do you think is going on? Or could you get in trouble with your license if you speculate on the possibility of counterfeit shares? No, there's no, look, there might be, I don't think there are fraudulent share certificates out there because everything is digital. I don't think there's any fraudulent nonsense going on. I could be wrong. I would love to see the Congress of the United States haul in the transfer agency companies and the clearing houses and talk to them about how stocks are cleared and how shares are borrowed. How are they lent? What parameters do you offer? How do you determine the margin requirement for clearing stock transactions? Why is it that Robinhood had to have way more collateral to allow people to buy and sell GameStop and AMC and a bunch of other stocks? I would like answers to these questions, but I would like the answers to come from the folks who put the policies in place. They weren't hauled in front of Congress. I want them hauled in front of Congress. I would really love to know, because I don't know who these people are. Do you ever see them on television? I've never seen the head of the U.S. Clearing Corporation, this clearinghouse, ever interviewed on CNBC. They're mystery people. I don't know who these guys are. I would love to know, get into the deep, murky world of stock clearing and clear it up for everybody out there, so that we as retail investors understand what the heck is going on. Who calls the shots and why? I would really like to know that. Kind of like to know if the SEC might be doing this as well. I like to see the SEC brought in front of the Congress and answer some basic questions that I think the world would like to know. Why does Robinhood know the answer, but you and I don't know the answer? Why does Fidelity know the answer? Why does Merrill Lynch know the answer? What contacts do they have with these people? We don't. We don't have any access to these outfits. We have no way of knowing what's going on. Why is it that a Fidelity, let's say a mutual fund or a hedge fund, can own 1,000 shares of Apple, or 1,000,000 shares of Apple, or whatever number of any other stocks, and they have to declare their holdings to the world through the SEC. But when it comes to shorting GameStop, they don't have to say a thing. Why is that? Why are hedge funds allowed to short 1,000,000 shares of GameStop, or 10 million shares, or whatever the number of shares are shorted on GameStop, and they don't have to tell anybody that they're short the stock? They don't have to report. What's that all about? That's ridiculous. I think that if you're long stock and you're dealing with other people's money, you have to report your position. If you're short stock, you should report your position. I think it should be mandatory. I think retail investors like ourselves, not that I'm one, I'm kind of putting myself in your camp. Retail investors should know what the short position of a company is and who is holding the short position, just like who's long. We know every mutual fund. You can go and look at any mutual fund out there. You can go right into the mutual fund's homepage, and you can see all the stocks they're holding. How many shares of Apple have they got? Intel, Google, Netflix, anything. How many they got? You can't find out short positions. Why is that secret? Why is that allowed to be a secret thing? Why is that allowed to be secret of all the short positions that are out there? There are billions of dollars of stock shorted all the time across the entire market. Probably hundreds of billions of dollars of stock is shorted all the time. All the time. No one has to report that position. How is that possible? That's what I want to know. Congress doesn't seem to be able to get to the answer, or maybe they don't even want to know that answer. And yet, GameStop went from $5 a share to $500 a share on a so-called short squeeze scenario, and nobody wants to know who was short the stock the whole time. 70 million were shorted at one point in time, all the way up and now all the way back, and there's still no revealing of the truth of who was doing what. I don't understand. What am I missing here? Am I asking for too much? Gosh darn it. That's Congress for you. There you go. Yeah, what can I say? Let's continue on. I'm getting closer to the end of my show. I got 13 minutes left for this morning's show. Time flies when you're having fun, isn't it? AMC is up 42 cents. It's at $6.97 today. Amazing. Is AMC dead? I don't know. It's up today. It's one of the only stocks that are doing gains. Let me take a look here. Royal Caribbean is up 11 cents. They've got a gain. JP Morgan is up $1.71. They got a gain. Cisco's up a penny. They're up. Bank of America's up 36 cents. Goldman Sachs up $1.24. Citigroup up 67. Walt Disney up 371 to 195. A company that's basically not making any money. Their parks are kind of shut down. The people out there, the investors out there, just think magically that as soon as Disney can reopen those gates, the money will come flowing in and the shares will go even higher. Why? What? If they make $2 a share profit next year, there's no way the stock is trading at $195 a share. It shouldn't be. It should be $50, $60, 80. Okay, I'll be generous. $80 a share. $195 for Disney. That is pie in the sky trading. If that ain't speculative, I don't know what is. Facebook up 344. How about that? Royal Bank of Canada's up. Bank of Montreal is up. TD Bank, CIBC. The Canadian banks are up today, like the U.S. banks. Netflix up 585. I thought the stay-at-home stocks were going to be down today. That's a stay-at-home stock. Next, Netflix. You stay at home and watch Netflix. It's up 1% in value today. Go figure. Unbelievable. DraftKings down $2. Moderna down $11. The drug company of saving millions of lives can't keep up with the orders. Everybody wants it. It's down $11 a share. The actual savior of humanity, along with other drug companies. Why is that stock down $11 a share? Unbelievable. People think that you're not going to take the vaccine anymore. You do realize, do you not, that once you've got the vaccine this year, you're going to have to get a shot next year? You know that Moderna will be doing production of these vaccines forever, and that forever mankind is going to need to be protected against these viruses for at least the next 5 years every year. Why is Moderna sitting at $147 a share? It was down to $136 today. That's a buy. They're not making money yet, but they're about to start turning their numbers around dramatically. I'm amazed that Moderna hasn't been a takeover target yet. I'm amazed that they haven't been bought out by a bigger company. They're capitalized at $58 billion. Chump change when it comes to a takeover. But I wonder, I shake my head and go, DoorDash up $247. That's a stay-at-home company. They're up $2. Airbnb down $9. I thought we were going on holidays next year. Airbnb down $9. Home Depot down $9 a share. Record profits, record dividend increase. Absolutely beautiful. What can I say, folks? Here we are. GameStop down $2.50 a share. $43 a share. On the big board for the Dow Jones Industrial, down 96, S&P down 23, NASDAQ down 215. We're getting a second sell wave today, but I don't know if it's going to be as bad as the first one. We may have one last limited opportunity to pick up a few bargains here today. We're going to have to see what happens. Home Depot moved to buy from strong buy at CFRA. Price target cut $10 from $300. I tell you, it's unbelievable how these analysts get it wrong. It's unbelievable. They're cutting the rating on Home Depot because they just posted their best ever numbers. It just defies logic. I bet you that analyst is recommending you buy Disney because they're bleeding all kinds of money in their parks. I can't understand it. This is a bizarro world in which we live, and in plain English, it's just downright stupid. It's just downright stupid. What can I say? It's just so much fun. Emily, GHVI dropping right now, 1908. Yep, getting more attractive all the time. Was down to 15 something. What a bargain today. You're not going to get these opportunities eventually. They will not be available anymore. But right now, that's what's happening. It's kind of quirky out there, isn't it? Crazy. Let's go. Okay, here, Francis. We've been talking a bit about the dip in Apple over the last few days. What is the best way to get on the action at this price? Options or just straight up stock? Well, it depends on your time frame. If you've only got 1 hour to invest, you're an options trader. But if you're an options trader, you're not an investor. You're a gambler. Apple today hit 118.39 on the low. Right now, 123, up $5 from the low of the day already today. Did get up to 124 something. Now at 123.16. For the last month, Apple has gone from the 140 range down here in 3 months. Yep, that was the high. 145.09 was the high of the 52 weeks for Apple. Now sitting at 123. Look, if you're thinking of buying Apple for a year, you don't care. Just buy it right now. Just buy it. You're thinking of owning Apple for an hour. I can't tell you what it's going to do in the next hour. I really can't. It's not fair to the company, not fair to certainly not fair to me. Look, it's down in the week from the 130s to the low to 120s. I think if you buy it here and in 3 months from now, I bet you between now and 3 months from now, you will probably be up at one point in time on this investment. But by how much? That I can't tell you. Is it going to hit a new all-time high in a month from now? It's going to take a couple of months for the next earnings report to come out. But something tells me when the next earnings report comes out, they're going to hit new record numbers yet again. But the last time they revealed their numbers a month ago, the shares went down. Go figure. Just like Home Depot, the shares went down after reporting record numbers. But if you're an investor for a year or two or three, this is a wonderful opportunity to get some on sale. Because I think Apple a couple of years from now will be much stronger and much more valuable than they are today. But some people haven't got that kind of time. They're in a hurry to make money. So what can I say? New short reports coming out tomorrow night. William, we got all kinds of stuff to watch tomorrow night and the next day after that, and the day after that. We're going to see what happens. Bob, what are your thoughts on Canadian bank stocks? They're at record highs. They're going higher. They're going higher. Yeah, they're making money like you cannot believe. MG, don't increase the share structure of GameStop and then start paying dividends with an initial and extraordinary dividend. See what happens here. Travis, they were shorting 102 million shares and there was only 71 million in existence. We'll see what's going on there. Congress, laugh out loud. Tony says, that's a dog and pony show to appease the sheep. Maxine Waters and 90% of those other idiots didn't even know what they were talking about. Well, they brought in people, but they didn't bring in the people I wanted to see. Yeah, there were people at the SEC they could have brought in to really help clarify, but they didn't do it. Is VGAC a long hold? Easy money? It's both. It's easy money for the medium and long term. If you buy this VGAC at 11.48 right now, I think you can make some easy money on this thing. Even if it goes to 20, you've done well. Goes to 30 or 40 after the merger, you're really going to be one happy guy. This is a sleepy stock right now. This is when you buy it. When the market is ignoring it, now is your time. Same with the Starboard and Fortress. These are in the low 10s. These are bargains, absolute steals. Careful, Bruce. You're talking a little too much truth out there. You should be lying a little more. Let's see what's happening. There's a 100,000 buy wall at 19 for GVHI. Interesting. When is the crash coming? I don't know, 5 years from now. I don't think there's a crash coming right now. Don't think that they're going to let it fall very much. Uncle Bruce is a genius. Thank you, Uncle Bruce. Is it because they're trading into cyclicals? It could be, Tony, but stocks go up and down and they flip around a little bit. The Dow down 103, S&P down 24, NASDAQ down 220. Hardly a serious sell-off by any measure here. What can I say? Let's see. Disney's streaming service has been one reason why the shares have done well, but it does not justify a $190 stock price on Disney. Not at all. Disney at 195 is now a $355 billion market cap, and the streaming service does not justify $355 billion of market cap. I'm sorry, but it does not. Not even close. Netflix is $238 billion, and it's only a streaming service. There's no way that Disney is $100 billion more. No way. No. Disney is way overpriced. By the way, Netflix this morning dropped down to a low of $5.18. It's now $5.37. It's up $4 on the day, almost $4 on the day. So it's amazing how these are turning around. Rather amazing. Gore Holdings, 1862. Get in there. If you're missing this stuff, if you've missed Gore Holdings 5 times now, here it is at 1860 or so. Get in there. Pick your Gore Holdings up. Grab it, put it away, and watch the show. We'll see. Disney in Orlando is open, yeah, but not at full capacity. We'll see. Not Disneyland is not. And if these variants come back, if these variants are going to become a problem, this is a big problem for Disney down the road. We'll see what happens. Doesn't Disney own other companies like Marvel, ESPN, and other stuff? Does this affect Disney? They do own other stuff. They own their studios. They own ABC television network. They own ESPN. They own the licensing rights to these entities. Yes, they do. They do. But 380 billion in market cap is rich, too rich for what they're delivering right now. I think the stock should be about $100 a share. That's just where I think they should be at. But hey, what do I know? I'm just an old guy yapping away to a bunch of folks following the markets. What can I say? What else is going on here? 7 years to vaccinate the entire world. Unbelievable. People are stupid except for Bruce. He's a genius. I don't know about that. Let's go here. Bruce, can you answer some questions about the Nikkei crash of 95 and if the Japanese economy might be growing again? The Japanese economy, the markets in Japan took a dump in the 90s, and they still haven't recovered. They've been printing money like crazy. They've had zero interest rates, but Japanese people refuse to spend their savings. They are notorious savers, and they're keeping their money into Japanese bonds and getting nothing for it, and they won't invest. The Japanese economy is just not open to new entrepreneurial ideas from the outside. A Japanese country will not allow immigrants into the country to youngify the country. The Japanese population is aging, has been for 20 years. Japan is getting older and older and older, just like America, just like Germany and France and Italy. They are getting older and older. Japan has had to and has not been opening up its borders to new immigrants because the Japanese birth rate is terribly low and is not improving, and so they're stagnant. Their economy has gone stagnant. The German economy, the French economy, the American economy, overall, the worry is by experts that unless America allows in younger immigrants into its country, it's going to become a stagnant economy like Japan has been for 20 plus years. But the policies of the last 4 years for America have been anti-immigration, completely the opposite. What is right was the motto over there. And unfortunately, it has cost America dearly in growth. It really has. But you try to convince Americans to allow outsiders in. It's not easy to do. And the end of the day, Japan is keeping a tight rein on immigration, but their economy is stagnant. And each year, more and more Japanese people are retiring, dying of old age, and there are no replacements to take it over. And Japan is having troubles. It's just the way it is. Countries that have an aggressive immigration policy and are encouraging birth rate, encouraging growth, are growing, making it happen. But if you haven't got the labor to replace the labor that's dying on you, you're going to have a stagnant economy, and that's just the way it's going to be. It's a temporary. There's solutions, but countries are not yet buying into the answer for the solutions. America grew at a much stronger rate from the 50s and the 60s because of the birth explosion after the war. America solved its young problem by creating babies like crazy. They came home from the war and had kids. That's what it was. But those kids, I'm one of them, we're aging out. I'm 65. I was born in 55. The war ended in 45. I was at the end of the birth explosion. And behind me, I've had one child with my wife. We've only had one child. That's a problem. We're supposed to have had 4, but we didn't have 4. We had 1. And many other boomers have done the same thing. And the millennials are absolutely delaying having kids. They're holding back, and they're having fewer children than their parents and their grandparents. And that's the problem in North America. We're getting older and not getting younger, and that's an issue. There's an easy solution, but no politician wants to run on that solution because it's right now not popular. What can I say? Anyway, there you go. We are now at 3:02. I'm over my allotted time. I've been on my 3 hours and I've been having fun. Oh my gosh. All kinds of comments here. Thanks for your time, Bruce. First time viewer and now new sub. Have a nice day. I'm off to buy VGAC at Home Depot. Pick the stocks you like and go with them, guys. Thank you. Me here with 4 kids, only one shot on target, Bruce. Then the government should pay me to have a kid. They're very expensive. Thanks, Bruce. Catch you this afternoon. Don't leave, Bruce. I'll be on this afternoon, 1 hour before the close until 1 hour after the market close, as I am every afternoon for 2 hours. So we'll see how the markets react between now and then, and we'll go through the shutdown and see what's going on in the aftermarket. We have so much news to cover, so much developments to cover. It's just going to be unbelievable. I enjoy your time, Uncle Bruce. Thank you, guys. You're my favorite boomer, people are saying. I enjoy you very much. Thank you. Thank you, guys. Let's see, Home Depot, high right now. Thank you for the dip. Stock of the day, yep, Home Depot, IBM, Starboard, Fortress, Gore Holdings, VG, and GameStop. That's where you want to be looking at, I think. Thanks for your wisdom, Bruce. So cheap. Should I put a put on the VGAC? No, don't worry about putting on a put. Just get in there, pick up more stock. And thank you, Bruce, Christy. Happy the weather is warming up here in Alberta. Oh, I can imagine. We're into the 40s here. Thank goodness for that. Thanks, Bruce. Take care, Uncle Bruce. Say hi to Jen. Appreciate your wisdom. And William Jones, been there, got the T-shirt. Wouldn't recommend it. Enjoy, Bruce. Thanks. Have a great day. See you this afternoon. Thank you, guys. We will catch up with you this afternoon for sure. Boston loves Uncle Bruce. Thank you, guys. Uncle Bruce loves you guys. Have a great afternoon. We'll see you 1 hour before the close, 3 o'clock Eastern time. I'll be back on for 2 hours today, and we'll see where the market wants to take us. Make a lot of money in the meantime, and let's see what happens. Okay, guys, thank you, everybody. We'll catch you later. Thanks for the thumbs ups today. We're at 1,100 thumbs ups and counting. Keep them coming. Thank you. We'll keep this. We'll keep the vigil going for you, and we'll talk to you this afternoon. Okay, bye for now. See you later.